Yes, I can unmute. Well, do you hear me? I might.
Yo, can you hear me? Do I sound all right? Okay, bet. Alrighty, alrighty. Good afternoon, everybody. Good afternoon, everybody. We are about to begin. If you're joining for the first time, returning, if I trade with you, how are y'all doing today? Hope everybody's doing all right. I am located in Texas. It is a pretty day, and I'm excited for this class. I'm excited for this lesson. Welcome new traders, new investors. Welcome returning traders, investors. Welcome everybody. Oh, we got some crypto traders in here too. Welcome everybody. Welcome, welcome, welcome. If you all don't know me, my name is Trey. I go by Shark. I am a swing trader and investor, investor first, then trader. Um, and I'm here to just pass on this education as I love what I do. I'm a technical analyst or technical analyst, uh, investor, trader. Love analysis. I love the strategy. I love back testing. So we're going to go in depth with my strategy as I just want to pass on this education for everybody, just so we can speak the same language. So when I see something in the market, we all see something, the same thing in the market. So I love it. There's a lot of great, great information that is being taught today. I see a lot of attendees, so I'm excited, man. Really excited. Now, and I've taught these classes before, so you'll get a in-depth on the beginner side of things and the intermediate side of things here. So I'm diving a little bit deeper than just the beginner side of things, and going into this for my new investors, new traders. Um, all that's required for a strategy is, of course, a broker, a trading platform for analysis. I would say I would recommend TradingView or Thinkorswim. Um, and the name of this strategy is called the Strat. It is called the Strat. So that's the name of the strategy. No, I did not create or invent this strategy. I discovered it, I enhanced it, I back tested and applied it to my already pre-existing investing and trading plan. And I see some familiar names in here. What's up, Wolf? What's up, Nate, Minato, Pepe? Oh, nice. I got some siblings in here. So yes, I've traded with you all. We've made money together. We'll continue to do so. But yeah, let's go ahead and get this class started. So, a little bit of history. Um, so let's first talk about why a strategy is important. So strategy, looking at this slide here. First of all, I just want to confirm, can everybody see my screen? I want to make sure I'm not sharing my desktop background or my port or whatnot. So, okay, everybody can see my screen. Cool, cool. And I sound loud and clear, correct? Nice, nice. Okay. So yes, since diving deep, why do we need a strategy? Strategy is a system. It's a system of rules. It's a system of rules that we need as not only a trader, as an investor. When I first started investing, or when we all first started investing, when we first heard of a share or a stock, we didn't know what that was. We didn't know anything to do with the stock market, the Nasdaq, S&P. We learned these things, and then when we dive in the depths of buying a stock, buying a share, you need a plan to be able to grow your portfolio, to grow your network, to grow your wealth. So with that approach, you need a system of rules. So anytime you hear the word strategy, the first word that should come up is a system. So you need discipline and structure is rules. Rules is certainty. So as long as you have rules, as long as you have discipline, which discipline comes with structure, then you will become profitable and you will grow your wealth over time. So with that comes, of course, risk management, right? So we need risk management. We need to know how to manage our risk. We need to know how to manage our risk tolerance. So that protects your capital with clear stop losses and position sizing. You need consistency. Consistency comes with rules. Rules comes with certainty. Certainty comes with what? Eliminating the factor of gambling. When you go and talk about trading and investing to your family members or close ones, acquaintances or coworkers, the first thing they do is tuck their tail because they believe there's some essence of gambling. Well, when you press your space bar on your computer, you get a space every time. You don't press your space bar and get a period unless your technology is messed up or you own a Mac. But so whenever you do that, the rule behind that computer is the space comes out. So you need consistency. You need to think like a computer or think or act like a computer when you're in the stock market. When that happens, all emotions go out the window, all fear goes out the window. However, we are sentient human beings, so this has to be built over time. So, with that being said, your strategy creates an edge in the market. My edge is I'm a momentum breakout trader. So I look for breakouts, I look for momentum. And as far as investing as well, I also look for breakouts, I look for momentum. So we'll dive deeper into that. And of course, going back to consistency, you need emotional control. If you're not in the right headspace, if you got a lot of stuff going on in the background of life and you're trying to get a Lambo in 30 days, that's never going to happen. You might as well, you have better luck signing up for the lottery with that. Uh, and with the system becomes measurable performance. So you're allowed to see your progress, see your profits, see your progression in this market. So that's why we need a strategy, and the strategy that I use has a system. And once we educated ourselves on this system, known as the strat, then we're able to speak the same language and create a system or a trading plan in essence. So diving down into the history of this strategy, it was created by Rob Smith, rest in peace. He passed away last August. We don't really know the cause. The wife hasn't really released the full details, but um, word on the street is he had a heart attack. So we go by that, heart disease, things of that nature. Excellent man, wizard in essence. He studied, he back tested, and he created this strategy based off of this cycle of the market itself. So, with that being said, the strat is a niche yet popular trading strategy. Was developed by Rob Smith over his 30-year career in the financial markets. So, this method is praised for its objectivity and systematic approach, while its complexity and unique perspective makes it less widely understood. Since it's unique and has its own edge, a lot of people don't really understand the language of it since it's different from just support and resistance. It's based off of breakouts and momentum itself. And with that being said, the strat is a multi-time frame strategy that focuses on three primary components: inside bars, directional bars, and outside bars. So these are the numbers that you see, what you're going to see in this PowerPoint presentation, and in live action as well, under the bars. So they have psychology behind them, they have meaning, and that this presentation will go in, this lesson will go into the depths of that itself. So the approach also emphasizes on several key principles, including full time frame continuity, broadening formations, and the significance of inside bars. So once again, this allows you to set up a system to make trading simplified, to make investing simplified. So now with this strategy, there's pros and cons. And when you create a trading plan and you know this, you know the essence of a strategy itself, then what you do is you take the cons and turn them into strengths. This is how I like to approach life in itself. I take my own weaknesses and turn them into strengths. Um, I read a book on the PCs of corporate America when it comes to interviewing. Anytime an interviewer asks you, hey, what are your weaknesses or what do you feel like you fall under at? And you take that weakness that you tell them and let them know this is how I approach that weakness and turn it into a strength. However, yes, the pros of the strat is it simplifies trading, helps with the macro, which is the bigger picture. So if you're a day trader or a scalper or a swing trader, it helps you know what's going on the bigger picture, the bigger side of things, as long as there's no economic events. So it's great for swing trading and investors. It's great for scalpers as well. However, you need to have more complex knowledge and use other confluences. So it's great for all types of traders. Yeah, it works with the New York Stock Exchange, crypto, futures, penny stocks, anything with the chart that has a label of rate over change over time. So it's great when you add it to your already existing system. So you can, if you don't want to be a primary stratter, they call them stratter as a nickname, then you can use this and add it to your already existing arsenal to make it more powerful. So that's amazing because that word certainty creates consistency. So now here's the cons of this strategy. I'm always completely transparent because I've been using this strategy for a year and a half now, almost 2 years, and I've been profitable. I've been profitable for a year. It's been an excellent year using this strategy. And I know the cons of this strategy. So one of the cons is there's a wide stop loss. So, and I'll show you visually what that looks like later in this lesson. But that wide stop loss will make the trader or investor have to be able to manage their risk, to have risk tolerance, to not full port, to not 40% port. So you'll see how we turn this into a strength later. You must use multiple time frames. So with that being said, what a lot of times with your trading plan, your plays, you have to see the bigger pictures on multiple time frames. If you use one time frame, the larger time frame will overpower the smaller time frame. So, and a lot of traders know this with other strategies and other candles, such as Heikin-Ashi or support resistance, reversal patterns, haramis, and things of that nature. So, you must use other confluences to gather an exit or target. So, with this, with any momentum breakout strategy, you have to have a elite trading plan on or knowledge on when to exit, or not be greedy, or use a trailing stop, things of that nature. So we already talked about discuss why you need a strategy. This allows you to grow and be consistent, to grow a portfolio. This will allow you to follow a system with very simple rules, allowing your port to compound in the long run. We're always looking to compound. We're not looking to get a Lambo in 30 days. You never want to be doing anything crazy like that. You might as well go sports bet or go to the casino itself. Um, so diving into this, we're going to get right into the nitty gritty. So we're gonna first talk about the inside bar. So a lot in we trade. I see some of the team here. Awesome. See Wolf. Um, so the team that we trade with, Panda, everybody, we know that an inside day, regardless of using the strat or not, or say an inside bar represents chop or consolidation. So an inside bar is a candle that has not surpassed the high nor the low of the previous candle. With this strategy, all that data is based off of the previous candle data. So I'll show you this visually in the market itself based on the chart. So an inside bar is a candle that not past the high nor the low of the previous candle. These candles represent consolidation and a choppy market within smaller time frames. So if you see an inside day on a smaller time frame, then you'll see clear support and resistance. Let's say if you see this on a daily, on the daily, if you see a one bar, a day is a one bar is an inside bar. On a smaller time frame, you'll see a clear representation of chop or a choppy market for that trading day or trading week. And I'll show you that as well. So these candles create great setups when combos are formed since consolidation is followed by a breakout. Now, this market, when you see the system as a breakout, if you see yourself at your edge of the market, in the market as a breakout trader, a momentum breakout trader, what you need to know is every squeeze or every period of consolidation is followed by a breakout. So because of that, straters love when we seek market consolidation because that gains the potential, the guaranteed potential to make money with the right set of rules. So right now, taking a look at your comment, Chris, we're not looking at combos yet. We're discussing the psychology of the inside bar. So with that being said, the inside bar, the one bar, which is the inside bar, lets the trader know that the buyers nor the sellers have reached a conclusion. They're at war with each other. There's chop in the market. The buyers and sellers are at war with each other, and we don't know which side to be on yet or which side has won. So yes, um, when a candle closes as an inside bar in a larger time frame, the ticker is set for either a breakout or increase in volume. And this will all make sense on the next slide. However, I'm going to show you all real life instances where we see inside bars. So let's take a look as I come over to my education tab here. We're going to take a look at, let's see, as far as the inside bar, you know what? Real life example. Let's take a look at Apple here. A lot of us played Apple calls. A lot of us, or me, myself, called out Apple puts, got in early. So let's take a look at Apple. This is Friday. This is Apple on Friday on the 11th. And this is Apple on Thursday because this bar did not reach the previous bar's high, nor the previous bars didn't break the previous bar's high, nor it broke the previous bar's low. This is considered an inside bar. So if we take a look to the left side of this bar is considered an inside bar. and I'll make a more clear representation of that. So if I go to this replay here to get rid of this example, so if I play this here, let me do it one more time. I'll make it go as fast here. So if we play this replay here and then pause it right here, this day on Thursday of last week, we closed as an inside day. So the buyers nor the sellers are in control. There's a war going on. So on a smaller time frame, you will see chop. So if I go to the 15 minute of this time frame here, if I move over to the 15 minute, let's say the 4 hour. So if I go to the 4 hour here, you'll see that there's a bounce between the buyers and the sellers. So we fell off pre-market. The buyers brought that back up at support, and then we chopped the rest of the day. But we did not surpass the previous day high nor the previous day's low. So let's go back to the daily. Now, if you look on Friday, this is in live time now. It is a Saturday currently. So once again, now we look left again. This candle on this day's close did not reach the previous day's high nor the previous day's low. So this is considered an inside bar. We do not trade as a swing trader and a stratter. Our rule, our first systematic rule is we do not trade on inside days. We do not trade on inside bars because you lose money and it's choppy. And if you do make money, it's a very small amount. Since you are a momentum breakout trader, you're waiting for a combination of bars to complete, which we'll go over further in this lesson. So we do not trade on inside bars, on one bars. Now, so going back to the slide here, that's our first dynamic rule within this here is we do not trade on inside bars as a stratter. We wait for the breakout to happen. However, if we do see an inside bar close, that means another candle will be forming. So we await to see if that is going to create a break of the previous day's high or a break of the previous day's low to decide if we want to be long or short. So um, if that makes it, we're going to have questions later. However, I'll go ahead and answer those questions later in a bit, but we're going to go ahead and move on. So just know that the inside bar is a consolidation bar. So here's some more instances here. If we look at Tesla on this larger time frame, on this side of here, this daily reference, this is Tesla on a daily. We have three inside bars here as a reference. So, and then if you go to that same reference on the 15 minute, we can see that the market was choppy multiple days. It was choppy. So if you're in a swing trade 2 weeks out and you're just experiencing chop, you're not getting paid if you're a trader. You're getting chopped out by theta and you're not following the rules of awaiting a breakout. So that is the inside bar, which is a consolidation candle. So remember the psychology. The war between the buyers and the sellers have not been complete. We don't know which side of that war to be on. We want to be on the right side of that war. So we want to be on the right team. Bulls or the Bears. So let's take a look at a two bar. So the main concept you need to know about a two bar is we call our two bars directional candles. And there's two types of two bars. There is a two up and there's a two down. So this candle extends above or below either the high or low, but not both of the previous candle. So you got to realize each one of these bars logic is based off of the previous candle's data. So you always need to look left towards the most previous candle to see if that candle has broke past the high or the low. In this essence, I'll give you a direct example here soon, but these candles give direction on which way the price is moving. So followed by consolidation. Once we see a directional candle, that's what side of the market we want to be on. So keep in mind with this strategy. I want you to know not just the numbers, but the psychology of what it means on a chart. When we look at charts as an analyst, as a technical analyst, we're not just looking at numbers, we're not just looking at price action. We also need to know the psychology of what's going on between the buyers and the sellers and the stock itself. When it comes to trading and investing, it's actually 50% analytics with price action, and the other 50% is psychology because we're not just going against the buyers and the sellers, we're also going against the market maker, the institution. We're going against economic events. We're going against seasonality at times. things of that nature. So you need to know the psychology behind it. And what the strat does is it also gives you that psychology ahead of time. It gives you that price action ahead of time. So once again, we have a two up candle. So we're reading here now. So two up being the situation when the low of a candlestick is higher than the low of the previous candlestick, and the high of that candlestick is higher than the high of the previous candlestick. And same with a two down. As you can see in this picture, these are all two up candles on this reversal pattern. Why is this a two up candle? Because this candle at this price point broke the previous candle's high. Same with this candle. It broke the previous candle's high, but it did not break the previous candle's low. So as we keep going to the right, this candle broke the previous candle's high. So over time, we get direction of where our stock wants to go. And going back to the other slide, since this is a multi-time frame strategy, that focuses on the components of the market, we get clarity, consistency, and certainty on which side to be on, especially when we use multiple time frames. So keep that in mind. If we look at the two down candles, we can see here that the candles on the previous on and this is Coca-Cola on a daily, by the way. We can see that the price broke the previous candle's low, but not the previous candle's high. And this candle broke the previous candle's low, but not the previous candle's high. We see this inside bar here. This candle did not break the previous candle's low, nor did it break the previous candle's high. So with this system, we now know what a consolidation candle is and what a directional candle is. So going into a realistic example of a two-up bar, we're going to take a look at something that's pretty popular here. Let's take a look at SPY. So SPY here had an inside day on Thursday on the daily. Now SPY, keep in mind, SPY is an ETF, so it has a very high market cap. So once it broke the previous day high off of this inside day close, it took off. It took off 3%. Yeah, we saw 579. So if you're on the side of the buyers on Friday, knowing this systematic approach, then you definitely made money. You definitely made money. Now, further along, we're going to talk about stop losses, risk tolerance, and things of that nature, entry as well, and exits. So, if you take a look going here, once this candle broke this previous day high, once this candle here broke this previous day high right here, hopefully I don't turn on all my charting. Um, then we would need to be on the side of the bulls and not the bears. Same with this here. And once again, this is coming from a swing trading approach since we're on a daily time frame. So um so with Stratters as a conceptual knowledge of our systematic approach, when we see an ETF or a Mag 7 stock close as an inside day, then we prepare our buying power and our trading plan for our entry above the previous day's high for longs and our entry below the previous day's low for shorts. So keep that in mind. So going back to the directional bars here. So now we're going to take a look, diving further in. As you see with the strat itself, um, we're looking at Coca-Cola on a daily, once again, two up bars. And I want you to recognize that if you see two up bars consistently in a stock on a larger time frame, such as the daily, as you look at the reference on the right side here, if you mark those and look at that and go on the 15-minute or a smaller time frame, you'll be able to mark the previous day high and low as resistance and pick point or depict uptrends versus downtrends to see further breakouts. So as you can see here with these candles, if you draw a wedge between the previous day high and previous day low, and you see that we're getting higher highs and higher lows, that means we're in an uptrend. And once that breaks, then or you call yourself and do things that of your systematic approach of other analysis such as triple tops, triple bottoms, whatnot, then you know a breakout is forming and we're in the uptrend, or at least on the right side of the market. So with this systematic approach, you have certainty, you have rules, you know which side of the market to be on. You know what's going on in the macro to focus or scalp or intraday trade in the micro, including extended hours or pre-market or normal hours as well. So that is a directional candle in this market. When you are an investor, when you are a trader, you have three questions: when to enter, when to exit, and setting your stop loss. So which is also when to exit, and also which side of the market to be on. So with those questions being asked, or when those questions are asked, and you use your edge in the market saying, hey, I'm a momentum breakout trader, you need to see what ticker is forming momentum. And then you need to know when the breakout is going to happen. And the last question you need to ask yourself is what direction is that breakout going to happen in? So once you have what ticker or what time frame the breakout is forming in, when it's going to happen, and then direction, you have completed your trading plan with logistics. So a two bar defines that direction. Should I be on the side of the Bulls or the Bears? So just keep that in mind. That's the psychology. If you see a two up bar, the Bulls won the war between the Bulls and the Bear. If you see a two down bar, the Bears have won the war. It should be on the side of shorts for that time frame. Now, while I'm going through this lesson, and I see your question here, Chris. You say what time frame do you watch to enter? I'm a swing trader, so I actually don't go anything smaller than the 8 hour time frame. But I primarily look at the daily and up. I love the daily, I love the weekly, and I love the monthly. I have hybrid time frames as I'll go through as well, which is known as the 2 day time frame, the 3 day, even the 5 day, even the 6 day. The reason why, and I'm glad you asked this question, Chris, is because what you need to know about this strategy and the reason why it's so powerful, profitable, consistent is the larger the time frame, the longer and bigger the breakout. So because I have back tested this and enhanced this strategy, I am now considered a swing trader. I love day trading. I will day trade at A plus setup. However, visually, I will show you all why it's so powerful. But you need to know that the larger the time frame and the higher the stock's market cap, the longer and bigger and more profitable the breakout is, and the higher the success rate of the combination of the bars. So not to dive too far ahead, that was a great question, Chris. We're gonna now talk about the last candle, the last bar here. So, just as an overview, we now have what a consolidation bar is. We know consolidation is followed by a breakout. Appreciate it, Ben. Thank you. Thank you for being here. So we know consolidation is followed by a breakout. We are momentum breakout traders. We are momentum breakout investors as well. And for my investors in here, I'm going to show you why this is so profitable when it comes to buying shares and looking at things in the long run for 1 to 2 year trading plans. So once we see candles close as a consolidation bar, it is followed by a breakout. This is the market runs in cycles. So this will keep you visually in tune with the market cycles. So what time frame do you watch for a break of previous candles to enter? That'll be, Chris, that'll be the time frame of your identity. If you're a swing trader, I would say you would need to watch the daily time frame. But you would look at no matter what time frame. Here, I'll show you visually as well. So you can be on the 15-minute time frame of SPY, right? And if you see, you always look left once to the previous bar on that same time frame. So to answer your question, it'll be on the same time frame, the previous bar. So if you see an inside bar on SPY close on a 15-minute, this hammer right here did not break the previous candle's high, nor did it break the previous candle's low. So if we're in live time here and this candle is forming, we only look once to the left. We don't look at this bar, we look at once to the left. And that's because this is the latest price action. Um, Now, once this inside bar broke down, then bears won. If you entered shorts here, you would have banked. So that allows us to know and enter our systematic approach. And yes, if you have another question or if I didn't answer it, definitely ask it again. I'll go over that with you. But I want to introduce you all to the last bar here, my favorite bar. This is the three bar. So this is the last one. The three bar is known as our outside candles. This is known as our outside candles or expansion candles. So with this expansion candle, we need to know the logistics we need to know when it comes to price action is this is formed when the bar extends or break past both the high and the low of the previous bar. Once again, each one of these bars is based off of the previous bar. So this bar here, this three bar, broke past the low and the high as it was forming, and it closed as a three bar. The reason why these are so important is this is known as a broadening formation. And this is a broadening formation on a lower time frame. And it means that price action is expanding. So that means we're getting wider highs and wider lows, and volume of that ticker is expanding. So price expansion lets us know that the price's range is now expanding, creating an increased range in highs and lows of the chart. So with that being said, that allows us to know that there is momentum. Keyword momentum. We are momentum breakout traders and investors. There is momentum in that ticker. So since there's momentum, we need momentum. We need volume to make profit. If there's no buyers and sellers in that ticker, then we don't know if we're going to make profit or if we're going to make profit in time if you're a trader or an investor. So if you see a bar on that time frame close as a three bar, you now know that there is money to be made in that ticker. It visually gives you clarity that there is money entering that ticker. Now, what's going back to my main rule with this entire lesson, the bigger the time frame, the bigger the breakout, the more money that's in that logically, the longer the breakout. So if you see a three bar on SPY on the daily, that means a large amount of money entered that ticker on the day. This is where stratters, uh, people that follow the strat, this is when they formulate their trading plan and they sit out for that day because now they're just awaiting one more question. We now have our answer of momentum and volume and price expanding in the market. Now our next question is direction, which is once again a two bar. Two up, we're in calls or longs. Two down, we're in shorts or puts. So I want to go ahead, not to jump ahead too far, and visually show you this representation on the chart here. So let's take a look at SPY here as we use our replay function again. So we're going to take a look at SPY, use live action or most recent action. Let's take a look at SPY September. We see that it closes the inside day, and this looks like it's at support here. So it closes the inside day on September 24th. We're going to play this here. Boom. That is a lot of money that entered SPY here. A lot of money. And for my intermediate technical and analyst and my novice technical analyst and advanced technical analyst, this is also a extremely bullish hammer. So once we see this three, we're not just saying, hey, that's a three bar, we got to look past, being, an 8-year-old and say, hey, that's a three bar tee hee, right? You want to look at the psychology. This day on Wednesday, September 11th, 2024, a lot of money entered SPY. Now, what is our next question? Direction. So we just need direction. So once you get direction here, you can be a shareholder. You can, buy, be a swing trader. You can be an intraday trader. We need direction. So we're going to take a look at, so what you're going to do, I'll put it like this. So SPY closed on September 12th. Now the market is closed. You now are setting your notifications for the previous candles, previous day's high and the previous day's low. So let me go ahead and mark that actually. Let me unhide this. Um, yeah, amazing. Okay. So now we're looking on direction on the previous candle's high, right? A break above this. means the bulls win. And the previous candle's low, which means for whatever reason, if this extremely bullish hammer is a reversal to the downside, we know not to be on the side of calls. So now we're going to hit play, set our notifications, and once price breaks out, we enter here. Now, the reason why, once again, you're going to hear this every slide. The reason why we know the higher the market cap of the ticker, this is an ETF, this is an ETF trust, and the higher the time frame, this is the daily time frame on the high market cap ticker or stock. That means the bigger, longer the breakout. So in this essence, as you hear in a lot in constructive common sense, my home court and golden pocket, golden algo, the 3-2 setup is now complete. You're in longs, buying shares, whatever. Look how long this breakout happens. And this happens because we are in SPY. We're not in Coca-Cola. We're not in, Disney. We're in SPY, so the market cap is high. So that means that a large amount of money entered here. We now have direction at the bulls won. We have direction. So the breakout is complete. This breakout from 555 to 563 would have been done for the month. So when straters look at this and they have a systematic approach, then they enter when the big money enters, and they don't enter when the price is choppy. So when we get direction, these directional bars, we love direction. That is our entry. Two up is our entry. A two down is our entry. In some essence, a two down can be our stop as well, which I'll go over. So that was a live example of why we love outside bars. We're a momentum breakout traders. I am itself. I am myself. So that's my identity. That's my edge in the market. Is there any time you would pay attention to pre-market action? Yes, 200% yes. I love the pre-market. I love the pre-market. And yes, yes, sir. Do you want to wait until the two bar closes before jumping in? Correct. Correct. This is your systematic approach. You wait for the directional bar. You wait for the directional bar. I don't care if you see bullish news during market close. If you still see the bar as an inside bar, you do not get in. This is how we get faked out. This is how we get chopped out. This is how we get our profit ate up by theta. So, and to answer your question, is there any time you pay attention to the pre-market? The pre-market is awesome because it hides price action. Yes, this is going to be recorded as well. Great question. So the pre-market is awesome. The pre-market is phenomenal because it'll also give you clarity on when to enter things. So same thing here. Now this is SPY. SPY is definitely something where when you trade it, you need to use elite risk tolerance, and you need to have an elite systematic approach to things. And that's actually why I'm bringing up SPY, because using the strat, you'll have conformity on which side of the market to be in. So this three bar here let us know that price entered the market. So it's going to use our replay editor again. So let's look at our bar replay. So once again, this is the pre-market. You know, what did it do? It looked bearish at first. It doesn't matter. We're waiting on the candle to close. We're waiting on the candle to close. So once we wait on the candle to close, look how fast that breakout happened. So we entered here. Big money entered here. Why did big money enter here? Because we saw price expanding, right? If you look on the right side of your chart, that is your price. If you look on the x axis of your chart, that is your time. So we know in this 5 hour time period, the price is expanding higher than the previous 5 hours. So that's allowing us and allocating us time to say, hey, there is a momentum breakout incoming. We just now need direction. So to answer your question, you now need to know which side to be on. Well, we had a two up. This two up formed when we broke the previous candle's high. Before it broke the previous candle's high, it was a one bar. What do? We wait. We didn't trade that because we can have that happen. We can have it come right below the previous day's high and go all the way down and get faked out. Once again, I'm going to say this you're going to hear this every 60 seconds to 120 seconds. What was going to say? The higher the time frame, The larger the market cap, the higher the success rate of this strategy. The less likely a breakout or fake out will happen. So keep that in mind. This is why I identify myself as a swing trader. Um, how do you know when to exit? I'm actually going to go over that in the next couple slides here. So that's what you need to know about the systematic approach of a three bar. The systematic approach of a three bar is an outside bar. This is an expansion candle. You need to know the psychology. You need to know the not logic, not just the profit behind it. You need to know that, especially if you plan on being not just a trader but an investor as well, or a have multiple identities such as scalping, intraday trading, swinging, crypto, futures. So, taking a look here. So, once again, a three bar is a as an expansion candle, outside candle. So taking a look at this example, this doji or this what is this, a dragonfly doji on the daily of SPY, this three bar, this is what it looks like on a 15 minute within this time frame, with this range. You can see that price high and lows are expanding. It's expanding. And then the next day, once it broke the previous day high, you could tell a breakout happened to the upside, but price expanded here. So this is why we call it broadening formations. So when you get into the intermediate and advanced side of things, if you are scalping, if you are trading reversals, if you are intraday trading, then you can utilize a three bar on a daily to know that price is expanding and that may be a good ticker or time to trade. And if you see it as an inside bar, you will tell yourself this is not a good time to trade. But if you see a three bar on a daily and you like to trade the hourly, the 30 minute, the 15 minute, the 9 minute, then you know there's money to be made. That's why this strategy is awesome because it lets us, this is probably the most important slide of the profitable slide of this entire lesson is the three bar lets you know that action is coming. There's money to be made. Volume is there. All the things we like to hear. So many people lose money because nothing happens for that day. And the reason nothing is happening is because we're still on the inside day, trading chop. So that this is elite for swing traders and intraday traders itself. Taking a look at your question, Pepe. The next day of a three bar, when you mentioned the set entry alert, it's when it crosses above the top of the three bar candle. Since the price can fluctuate or go lower than the top of the wick of the pre-bar and bump back, how long are we going to look at the chart to decide to go in? So that is an excellent question. Most of the time, since there is this strat is becoming more and more popular. What's happening is the market maker is chasing stop losses faster and quicker. So to compensate this system, you always need to buy a healthy expiration date for swings. If you get into a swing contract and it is the same week off the daily time frame, off this three bar in this screenshot here, you are more than likely either going to lose the trade or you're going to lose most of your profit. So you need to buy at least 2 weeks out to compensate for stop loss chases or adding to your position itself. Now, the beautiful thing about this strategy, since it's so profitable, although your stop loss is chased or whatnot, and although you need a healthy expiration date, you can even go 3 or 4 weeks out, you'll still make money. You can go out the money and still make a lot of profit. As long as, if you're looking at contracts, as long as your delta is higher than 0.15, you can go out the money. So for my Golden Pocket members, if you ever see me call out a swing and it costs too much money for my small accounts, and you want to get a contract that is 1.50 premium, $150, you can do that. You can go further out the money. Just take a look at your Greeks. Make sure it is above 0.15 on the contract, and you'll still make money. So that's an excellent question. So we want a two-bar candle after a three-bar to no direction. Perfect. That is exactly what we want. That is exactly what we want. So if you ever see my name in my Discord, it is called Solid Shark Nirvana, and you'll know why here in a second. As long as your delta is higher than no, not 1.5, I would say 0.15, 0.15. Yes, 0.15. This strategy is amazing for growing small accounts. My account is extremely up on the year. I intentionally started with $300 to perfect this strategy. And I turned $300. I mastered this strategy and turned $300 into 2K. Once you get to 2K, this strategy literally becomes autonomous. It comes autonomous because you have a system and you're looking at three bars and you know the psychology and you know what's going to happen. If you do not make profit after that, the only thing left is to work on your emotions and your patience and ignoring news and internet stuff. That's actually a process too. But um, so yes, that's a look at the inside bar. So going on to the next slide here. So how do we trade a breakout? Well, we went over the 3-2 setup already. So look for candlesticks that closed with either price consolidation or price expansion. So if you look at this color coded thing here, what does this first line not have in it? It doesn't have direction. So if a bar closes as a 1 or a 3, there is money to be made. But keep in mind the key word is close. We want candlesticks to close first as a 1 and a 3. We want this trading and investing is a game. You're taking somebody else's money. So we're essentially getting in after everybody else either got chopped out or after big money that knows what we don't know because large institution get all everything ahead of time. So we want to be on the side of big money. So think of the keyword of big money as three bars, and think of the logic of a one bar as retail traders getting stopped out or chopped out because one bars are representation of chop. So taking a look at this slide here. So yeah, we look for candlesticks that closed with either price consolidation, which is a one bar, or price expansion, which is a three bar. We await direction using the methodology behind a directional candle. We set your stop loss and size in accordingly off of the breakout pattern. That is super important. So I want to go over stop losses before I go over exits here. So let's take a look at the market again. Um, Take a look at stops. So let's take a look. Somebody give me a ticker. Let's look at Nvidia. Nvidia is doing amazing here. So let's take a look. We ate off of Nvidia this week. Let's take a look. We ate off the 2-day Nirvana setup. So we ate off the 2-day. Where is it at? Was it the 2-day or the 3-day? Let's take a look. Here we are. It was the 3-day. So we ate off the 3-day Nirvana set up to 132 to the upside, or in case 3-2 to the upside. So in our essence here, when we called out Nvidia, great call out by Wolf, great call out by Rock, and I called it out as well. Um, as you can see, if you were in the Discord, I posted the watch list, and I said this week I put Nvidia like 40 times because you need to look at Nvidia because what we saw this. This is what we saw. This is why I said we need to look at Nvidia. We saw, and congratulations, we had people that made 10K, 5K, 2K, 500, small accounts flipped. So congratulations if you followed the call outs. Yeah, it was amazing, amazing setups. We love price action like this. This is Nvidia. What is Nvidia? It is in the Mag 7, high market cap, high volume, high profitable stock, or stock itself. So what questions do we need to ask ourselves? This is the 3-day time frame. As you can see, just to introduce you all, I use I use over 40 time frames because I don't need to miss any money to be made. I use over 40 time frames. I got the 1 minute, I got the 2 month, I got the 9 minute. Shout out to Wolf. I got the 27 minute. I love it. You'll find your entry on these particular time frames. Do you need that many time frames? Of course not. Of course not. You can use the daily, weekly, monthly, the 2-day, and the 5 hour and find money to be made. But I like to find all the money because it allows more people to have the opportunity to make money, to have all. We call out. I will call out any setup that is being created on any of these time frames. So if you're in any of my communities, you're going to be making money. That's just what's going to happen with our scanners and our indicators. You're going to be making money. We have scan. So just keep that in mind. But let's go back to the logic of things. So let's look at the three bar. The three bar closed what was this? On Wednesday as a consolidation candle and a price expansion candle. So what did that tell me? What do I start posting? Hey everybody, money is entering Nvidia. A large amount of money. Institutions know where Nvidia is going to be headed. They are already buying in. But we don't know if they're buying calls or shorts. People with call flow, they know. I don't even listen to that either because I need to see it on the chart. I'm an analyst, not a predictor. So I need to know where price is going to go. So as we could see, let's take a look here. I'm going to slow this down, see if it does that. But this stock moves so fast. Yeah, it moved fast. So once our alert went off on Thursday, right? Because this is the 3 day time frame. So this candle is going to take 3 days to form. This candle is going to take 3 days to form. Once this broke, it let me know that the buyers won, right? What is our percentage of being faked out? It is way slimmer when it comes to high market cap stocks that have a lot of volume and a lot of people in it. That's what market cap means, a lot of money in it. This is why I love this strategy. If you go and take the 3 day on a penny stock and look for a three bar and wait for a directional candle, you're most likely going to be faked out because there's not a lot of money. So there's a lot more risk to have a whale come and fake it out. But when there is institutional money in the Mag 7 ticker off the three bar, then we know that we are going to make money. And I'll prove that further visually later. So once we got in right here, we called it out here, right? And I'll talk about exits later. Our exit was 135.14. Um, when we set our watch list for the week, we look at that stock the whole week. Why do we look at the whole week? This is the 3 day time frame. The bigger the time frame, the larger and longer the breakout. You're gonna hear that like 15 times during this lesson. So let's see what happened. Let's see what happened. Boom. That's about, let's see, 5 contracts. That's about 6K. That's about 6K right there, right? Now let's talk about stops because y'all got me excited for no reason and I got carried away. I meant to bring up stops. Our stop loss off of a three bar, if we're in longs, we set our entry, right? Our stop is at the bottom of the three bar, right? Stop is at the bottom of the three bar, right? Now I used the profit amount of 6K, right? If you're a small account and you see that your stop is $10 range, right? And you have to get an expiration date that's healthy, so just in case it comes and fakes us out, which they like to do a lot, because they like to fake you out and then run it back up. What does that mean? You need to get a healthy expiration date and you need to size in accordingly. If you don't size in accordingly, you're going to be thinking about it all day. You're going to get emotional. You're going to get faked out. You're going to sell early. You're going to sell early. You're not going to lose. I'll show you why you won't lose, but you're going to sell early. You won't lose because it's the larger time frame. If this was a 4 hour, it'd be a higher probability for you to lose. This is the 3 day. But yeah, you're going to sell early. And you're going to sell early because you sized in too much. That's the only reason why. Because with this amount of breakout, if you put $70 in this, you still made 100%. If you put 150 bucks, you made over, this was over 100%. This is 250% play. You still doubled your money. So you need to know, going back to our slide here, the slide is complete. This whole presentation is complete. You need to know risk tolerance, right? You need to know risk tolerance. You need to have risk management. You need to have discipline and structure, follow the rules. You need to have risk management, stop going for home runs. You need to have consistency. So know that your strategy works as a high win rate. What do you have to worry about? Instead of focusing on winning your next 5 trades to make thousands of thousands, focus on compounding your account over the next 100 trades off the inside bar break or the expansion bar break. Your momentum breakout traders control your emotions, measure your performance, seeing how your trades do. If you're getting faked out a lot, you need to size in less. Literally, that's how I compounded my $300 account. I took I did like 50 buck contracts over like 4 different 3-2 setups, and I hit 1K in about 2 weeks. And then after that, it's a snowball effect, as you know. So you just have to be disciplined, y'all. You have to be disciplined. So your stop, that's what I want to go over. Your stop, if we win to the upside, right? If directional candles a two up bar, your stop is right here. Now, same thing with the downside. If I can find, let's go to scan here. 3-2 down. Same thing with the downside, right? Let's take a look. Yeah. So same thing with the downside, right? This was back in, wow, 2019. This doesn't happen often on the video, so congrats, y'all. Um, the downside here, your entry was here, right? Your entry was here. This was your entry for shorts. Your stop would be here, but this is a shorter range. This 3 bar was a shorter range, right? Of a stop loss. Wow, Nvidia was $4 back then, 2019. That's. Oh wait, no, this was before the split. Um, so yeah, so it broke out. You made money over the next 27 days. Holy cow. Um, but your stop was above the high of the previous bar. That's when get stopped out. The stop loss is very scary. That's why you have to. So, Chris, that's a great point. So, let me tell you my systematic approach. I size for zero. I size for minus 100%. I size in with the amount of money I'm willing to lose. If I don't want to wake up and see my account down 2K, I won't put 2K into the play. But if I don't care about $200 and I know $200 will make 400 bucks on a larger time frame, I don't need to look at it until my notification of my stop loss goes off. I can go and do whatever. That is my systematic approach, and I'd recommend this methodology because you got to realize I started off as an investor before I started off as a trader. So I've conquered theta. Theta doesn't bother me anymore. I buy a healthy contract with a healthy expiration date, and you watch as you make profit because momentum breakout is where money is at. That's why this is so powerful because it will pay on a larger time frame. It will pay. Guaranteed will pay. So that was a great question. The stop loss is very scary. And as you go larger in the time frames, right? I would recommend you need more discipline and patience on a larger time frame. What happened on the monthly of NVIDIA? Why are we running? Because the previous day high has broke and it's running straight up. Why is it running? There was consolidation the previous month. It's a larger time frame. It's the monthly. Since it's the monthly, we ran up $13 already. Where is our stop loss? It's way down here. Why is it way down here? Because the market maker has been known to run this all the way down to here, fake us out, and then run all the way back up. If you hold that contract, I have receipts. If you hold this contract through the stop loss chase, you will still make plenty of money. And if you have size and the knowledge or wisdom to add, do so. If not, if it's too much, don't do it. Don't recommend it. You can still make money with one contract. One contract. You have to get the healthy contract. You have to, when you're holding it for this long, you have to know that you have the possibility on the monthly time frame to be red for 4 weeks while everybody else is making money in other plays. And then you watch your play run up and make more money than all those other plays. What do we do on Meta? I sold Meta early. I got stopped. I got faked out. I got my emotions. Look at Meta. They chased our stop loss after the daily break all the way down to the 50% mark. And that's intermediate knowledge. I'll go over that in a later class. And then they ran it back up. And so that's a great question. If market makers are always stop loss hunting, why not wait and enter the stop loss hunt? Because the market maker is so nifty that they only stop loss chase sometimes because they want your brain to know that sometimes it's going to run immediately and sometimes it's going to run later. So you all as this to counter that, you size in accordingly, let them get their tip of their burn premium, and then you wait for it. This is what's been working for me the last 2 years. This was my most profitable plays of the year. So let's take a look at Google to further that example. Um, look at Google. Look at Google. So we made about 8 to 10K on Google this year. It was an awesome play. So look what Google did. Once this month closed as an expansion bar, right? We got in here. If we would have waited for the stop loss hunt, we would have missed out on our 10K. So they do it sometimes. They only do it sometimes. And then you come down here for shorts, boom, large money entered the market. Large money entered the market here. Once this previous candle's low broke, they chased it all the way back to the 50% mark. of this candle, the 50% of this candle, and then they ran it down. It doesn't matter because even if you let them play their dirty little game, you still make money and you still make plenty of money. And as you get more comfortable and confident, you know when to add, you know when to use your other arsenal and tools. And I actually, Chris, I would recommend that you use your other arsenal and tools. However, there's times where when you know you're going to win, then you don't even care about waiting, or you don't even care about getting in early. That's how strong this setup and strategy is. So I hope that explains stops well. I just want to go over one more instance of a stop and on a AMC. So with the inside bar break. So looking at AMC, I don't know why I'm not in AMC right now. I should be, but once this, let's take a look here. The replay editor. Boom. So we have two inside bars on the 5 week time frame, y'all. The 5 week time frame. I look at so many time frames because you need to see what's going on. And if you follow that systematic approach and you have the knowledge of when the breakout is going to happen visually, and based off of that time frame, then you know how to buy an expiration date and where to set your stop and your entries at. Or you can buy shares. So you don't always need to buy a contract. You could buy shares or you could buy shorts. So taking a look at AMC right now. My Google Home does not like AMC. It always turns on when I say it. I don't know why. Um, so taking a look at AMC, we had each one of these candles, y'all, represent 5 weeks of consolidation. And we know that consolidation is formed by breakout. Once again, we know the bigger the time frame, the bigger the market cap, the longer the breakout. So let me tell you something about inside bars. Multiple inside bars form and they close, the bigger the breakout. This is called a squeeze in other strategies. This is called a pennant in other strategies. So in the strat, we call it a squeeze or we call it consolidation into breakout. So we had 5 weeks. Yep, potential holy grail, correct. We have 5 weeks of a consolidation after the big AMC pump, right? These are buyers and sellers here. They're buying in. We got half these people, or it looks like there's more sellers. We got a lot of sellers here. These 5 weeks, we have a lot of buyers, a lot, but we don't know who wins yet. Now we have buyers kind of took control over this week, and then sellers are in now, still consolidating. Picture a ball compressing. What do I want to picture? Picture a water bottle compressing, you squeezing it with the lid halfway open. And then once that oh God, once that consolidation gets too dense, breakout happens. The cap off the water bottle flies off. You need to know what direction it's going to go, what side it's pointing towards, right? So once again, I remember y'all saw me change my name. Boom. Next consolidation happens. Certain people start buying calls here. Other type of traders buying calls like AMC, whatever, Twitter, whatever, right? Me as analyst, as a strategist, we are not trading this. This is chop. Why would you trade this? Why would you trade this? This is chop. It has not broke past the previous candle high nor the previous candle low. So continue. We're gonna play this here. So it looks bullish, whatever. Now it looks bearish, whatever. It looks bearish, whatever. Okay, boom. Now, boom. Market makers faking people out, right? If you're a stratter, you wouldn't even see these numbers. You would see this. You'd be like, oh, that's kind of bullish. Look at this bullish hammer. Well, if you're more advanced, this doesn't look bullish, right? But yeah, it's a bullish hammer, whatnot, right? As a stratter, we're sitting here like, no, we don't care. We don't know which side won yet. So I'm gonna keep pressing play here. So as you can see, whatever, hey, potential, whatever, they start dropping news to fake you out, get people to FOMO in, whatever, market seasonality, whatever, economic events, cool earnings coming up, people are buying in, they're just all gambling. So, um, yeah, so they're all gambling, right? They might see something else on a smaller time frame. It's like, hey, we see this consolidation. We see this price compressing. All we care about is the breakout. We need to see which side wins. So we're waiting for everybody else to lose their money. Yeah, the stock market is evil. Wait for everybody else to lose their money, whatever, right? We still don't know. By the way, now we're in September. So this is 15 weeks. So the longer the consolidation, the bigger the breakout, y'all. That's why I'm pointing this out. That's why I'm pointing this out. The longer the consolidation, the bigger the breakout. Longer the consolidation, the bigger the breakout. So whatever, this is going, whatnot, da 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 da. Okay, now it's looking bearish. Still not in a trade. Still not in shares, shorts, whatever. Okay, boom. Now we see that the Bears have won. It broke the previous candle's low, finally, at 4.41. We're in shorts. I don't know why I'm not in shorts. I should be. I'd be up right now. So now, as you can see, if I get rid of this replay, going back to live action, as you can see, now we went all the way down to 4.03. Now we're at 4.17. Your entry was 4.54, right? Or sorry, dang. Your entry was 4.41. Now we're at the low was at 4.04. Now we're at 4.17. Since the time frame is the 5 week. This breakout to the downside is going to potentially kill this stock. So if you're in shorts, congratulations, whatever. But I just wanted to show you this. Now, your stop loss based off of Shark's systematic approach with the strat is going to be 5.44. So if you're shorting or whatnot, you need your stop to be 5.44. Why is that? Because if this or if this, yes, so if this breaks out there, that'll be your stop. However, if you're already in profit, you set a trailing stop. You can set a trailing stop. I set trailing stops all the time. But if your breakout, you're at break even, and you don't know if you're winning or losing, your stop will be up here. In this case, with the AMC, we did not wait for the 3 bar because 1 bars get paid too. So the close of a 1 bar pays money too. These 1 bars is price compression, or yeah, price compressing for 15 weeks. Price compress. So it's followed by a breakout. So diving back into our slides here, I'll go over exits as well. Let's see here. So yeah, your weight direction using the methodology of a directional candle. Set your stop losses, size in accordingly based off the breakout pattern. So if you see a wide stop loss, you size in less. If you see a narrow stop loss, you can probably size in more because your stop loss will be tighter, if that makes sense. Think about the chart, rate over change over time, or price change over time, which is rate of change over time. So you need to keep that in mind. That's what you have to master and conquer yourself is risk tolerance, risk management. So your emotions do not make you sell early. So your account is not down 80% because you saw that Nirvana set up and a breadstick set up Holy Grail is a 96% win rate. That does not mean full port because your emotions will make you make a mistake over your next 100 trades and you're going to lose your buying power. Um, so what's the easiest way to tell the difference between a 1 bar and a 2 bar? So the easiest way without the indicator, if you turn your indicators off, is to know that, let's take this here, turn it off. So easiest way without the indicator is to know that this bar did not pass the previous bar high, nor did it pass the previous bar's low. So it's still inside on the previous left candle. Same with this candle. Look at this candle here. It did not pass higher than the previous candle's high, nor did it pass lower than the previous candle's low. So it's an inside bar. Now you need to know that when a candle closes as an inside bar, this is price compression. And that after that is followed by a breakout. So you're waiting for a directional bar after that. Um, now keep going here. Now we're going to get into the nitty gritty of we're gonna get into nitty gritty of combinations. So as y'all know, in my Discord and my in Discord itself, my nickname is Solid Shark Nirvana. Um, I don't want to share this. My nickname is Solid Shark Nirvana, and this is why. This is the most powerful, actionable trading setup in the market. Literally, the most consistent, profitable setup in the market. The one there is not. If you've seen a better setup or pattern, let me know. We can go to war at it. This is the most profitable one in the market. You love it. Yes. It has made all of my following, all of our team the most money in the market if they played it, if they stayed diligent and were patient to wait for the breakout. The reason why I don't know what happened to my text here, but I already remember what I put here. It gives you power and direction. The consolidation bar is price compressing. The three bar, right? Consolidation bar is your one bar. So your one bar is price compressing. Your three bar is volume expanding. And when you look at the correct tickers, when you look at the correct time frames, when you look at larger time frames, that means it's going to make a lot of money once we have direction. So this is the most powerful actionable trading setup in the market by using the consolidation one candle and the volatility of the three bar breakout candle along with the direction indication of the two bar directional candle. The trader or investor will be able to have conformity of the direction and power of the next breakout. So what that is telling you, every question in investing and trading is answered for you. Where is money at? Where is price compressing? Where is volume at? And where is it headed? How long is it headed as well? How long will it be heading there? All of that is answered for you. So as you can see, the ones that have been trading with me, as you can see, I kind of always get in my play and they always go down 40% before they go up 200%. Why is that? Because I'm always calling out plays on the larger time frame. And because the market does not go up in a straight line until the breakout happens. I don't want to miss out on that. I have FOMO because my strategy is back tested and has a 95% win rate. So, what's cool about the Nirvana setup is this can be found on any time frame. The larger time frame, the larger the movement, allowing the trader or investor to be able to play longer plays to the upside or downside. So this is what it looks like when once again, when a Nirvana setup is forming versus when it's complete. I want to show that. I always use the very first one I traded, which was Meta. I discovered this setup back in October of 2023, and I've been profitable ever since. I switched my name to Solid Shark Nirvana because this is the only combo I really trade. Um, I do. Great question. Why don't you always go out really far expirations like 3 months or more? I usually do. I do for my leaps. I buy leaps. My investment and I buy shares for my larger time frames. Each particular time frame has a certain amount of time you need to put on that ticker. Do you ever see the same setup on multiple time frames at the same time? Yes. Yes, yes, yes. Like when you see this on multiple time frames at the same time, it is so hard to care about anything else in the market because people will send me like peanut plays and all this. I just don't care. I'm adding to the position because it's so profitable. So let's take a look at Meta, turning the indicators back on. Our first Nirvana setup that we traded in 2023, me and Wolf was in it, Obsessed was in it. My whales, my Tesla whales. Let's see, John, Steve. So my whales, my millionaires, big bag holders. We were in Meta. Some of us sold early because I know I sold early because back then my account was small. I was like, well, 2K account, and I saw $300 profit. I was like, hey guys, I made money. But we have some whales and some people in our certain community that held through the entire breakout and they quit corporate. Well, one did, but the other men they made 10K, 15K. So let's take a look here. So we have a chat or a tab called known as the bank list in constructive common sense in my trading community. The bank list, excluding hollow, has a 100% win rate. We look at this and we're chilling. We're chilling. We're ignoring the fluff, ignoring. We see stuff like this, and we get in and when we just sit there and just let the money make itself. And we kind of sell contracts here and there. Sometimes we'll see a pullback, get back in. But these type of setups on this time frame with a ticker like Meta that has a high market cap comes rare. But we know that when we see this gives us the potential to only make 3 trades a year. So when we do, entry was here at 330.78. Our stop was 279.85. So what does that say for a small account? A small account would have to full port this and wait 45 days to make profit, or potentially 3 months. So if you only have $1,800 small account, You have to full port. You need to know a trading plan and you need to know what you're doing and pick the right expiration date and the right contract. So, and you could go way out the money with Meta, but in this instance, you need to have experience of trading these setups because they take time. So as you could see, Meta after this formulated a breakout from October all the way to March. But as you can see, let's not just look at the positive side. What are the cons? What are the cons? Well, as you can see, this thing pulled back all the way to the 50% mark, like we always preach in Golden Algo. Things pull back to the 50% mark to chase stops. Are you willing to care about your account being down, your contract being down 70% if you're willing to make 1000%? You have to be that type of trader for this type of time frame. So, and the reason I'm putting emphasis on this is because there's a lot of time plays I call out that is on such a large time frame that you're going to see your account in the red on the day for that contract for 2 to 4 weeks if I'm playing the monthly time frame, if I'm playing the 5 week time frame. Now, if I call something out that was a Nirvana setup on a daily, you're going to see money in like a week, 4 or 5 days, maybe 3 days, sometimes 2 days. So you need to know yourself as an individual on what you're going to do. But let's take a look. Nirvana setup. So Nirvana setup tells us that price consolidated for a month on Meta, which is a high market cap stock. Big money entered right here because they know where the stock's going to go before us. Market manipulator knows all the big whales and Nancy, they all know. So they're buying here. So this is our first 3 bar in months because they know something. So anytime you see me type um big money enter here, whatever, right? In our communities, this is what I'm seeing. Big money is entering on a larger time frame. On any of these time frames. I'm looking through all of them. I'm seeing that big money is entering. I create and formulate a trading plan, a systematic approach with entry and exit and stop loss and where I add. So I'm not guessing, I'm not looking at newspapers. I don't care about CNBC. I see as an analyst what's going on in the hindsight of things. So taking a look here, you entered here. Now, I'm going to talk about exits once again later. I just wanted you to see the Nirvana setup and the power of it. I do see we have a large class here. Nice. Oh, okay. Well, we have some crypto guys in here. Oh, wow. Okay. So let's talk about crypto. So cryptocurrency, crypto coins, all of these systematic approaches work with crypto, it works with futures, it works with scalping, it works with penny stocks. So let's see. Let's take a look at crypto. I'm gonna scan here to see if I can find a Nirvana setup on crypto. It's really quick. We're gonna go through a couple time frames using our indicator down here. Um, let's do this. Let's look at Bitcoin. Let's just go to Bitcoin. Let's look at history. Let's use our indicator to search for a Nirvana setup. A couple of you all played Pepe with me. Let's look at Pepe, and we made about 5K off Pepe. Um, yeah, so we made about 5K. What was it here off Pepe? So. Taking a look at Pepe, and these indicators are so wonderful. You don't have to dig. Um, so yeah, it's taking a look at Pepe, right? Let's just do a replay because I know there's beginners in here. Let's see. How do you replay again? Y'all messed up. Y'all got me excited. All right, let's go normal speed. All right, so Nirvana, this is a Nirvana setup forming, right? This can happen in the New York Stock Exchange, S&P, crypto, all of this, right? Nirvana setup was forming. Right? 1-3. We now set our entry to here and we set our exit here, right? Because it looks bullish. So let's just be realistic. Set our notification. This is the daily time frame. Crypto does not close ever. It's ongoing 24/7. So I bought in here. I called it out in Wolf's Discord. Congratulations on the ones it took. I think I bought like 5K worth of coin. No, I bought 2,200 worth of coin actually. So once again, crypto is very honest when it comes to this setup. So you would have banked here, did a pullback back to entry, did not matter. It ran for the next couple days. Now take a look at this here. Our stop loss, right? Let's do this here. Our stop loss is red line, right? Let's do this here to make it more. This is our bull entry, right? We got in here. If you set your target at a reasonable target, which I'll show you how to set a target, and you set your stop here, this structure of the Nirvana setup has not been broken. This is your stop loss exit. Now you can set a trailing stop or whatnot, but holy sh yeah. So this happened. It blasted through our target. I think it was like at 2 a.m. It broke out. Nirvana setup completed. But the Nirvana, let me put it like this. The Nirvana setup completed once the two up was formed. This is now considered a bullish Nirvana setup. A bullish Nirvana setup. Just to be clear, the entry is on the first two candle that breaks the high of the one or the three candle. Yes, it's the high of the three candle for Nirvana setups, and it's the for bullish Nirvanas. And for the low of the three candle, that's a bearish Nirvana. So that's a great question. So yes, and the two up is formed after the high of the three candle. It's always the candle that's closest to the left. That's the high or the low, or that's the entry. So the entry is based off of the candle furthermost to the left, the very previous candle. So yeah, the Nirvana set was complete. So we banked on crypto. A lot of guys made a bank or bag off of that. So said, why don't you do more crypto? Is it because it moves 24/7 and never closes? I actually do. Yeah, we trade crypto very often. I'm looking for more capital. That's the only reason why. But yeah, crypto is amazing. It's amazing. I definitely recommend it. We call out coins in my community. We call out coins in Wolf's community as well. I know I have crypto analysts that find Nirvana setups on the weekly basis in constructive common sense. So that's my free trading community. And then I also call out A plus setups of crypto in Wolf's Golden Algo Discord. So if you're in here, Wolf, you can definitely link that. I'd highly recommend. It's a great community, and we call this out all the time. Um, with crypto, you just need to know the knowledge of how to send coins and networks to use. So wait until the two candle closes for the day to avoid getting faked out. No, as soon as it forms, that's when you get in. A fake out is an emotional correlation to your play being down before it breaks out. Being stopped out means that your play is being sold for a loss to mitigate your losses. And if you follow this system across the next 100 trades, your account is guaranteed to compound at a large amount. So we have plenty of traders that follow these rules, and they're all in profit for the year. They're all in profit for the month, the week. Some of them are new. Some of them I've have people that start off with $100. So you need to follow the full rules in hindsight. So I'll also be hosting more classes to get more in depth on this. So that is the Nirvana setup. We have it in crypto. We have it in S&P. We have it in New York Stock Exchange. It's in futures as well. Let's take a look at futures. So taking a look at futures, I remember when all the seasonality. Oh my God. Oh dear Lord Jesus. I did not see that. Okay. Anyway, that's money to be made next week, this week. So let's see here. Taking a look. Yep, the SPX. If you trade SPX, if you trade NASDAQ, let's take a look at my watch list here. Let's go look at NASDAQ futures. Let's take a look at the ES mini futures. So, oh my dear Lord Jesus. Okay. Yeah, let me not look at that. Let me get sidetracked. All right. So let's taking a look here. Nirvana setup formed in June. I know there was one like when everybody said the market was going to crash. Um, when the war news happened. All right, let's look at the daily. Daily is our most common play time frame. So Nirvana setup happened here and it happened here as well. Let's take a look at this one here. So this one was profitable, but this was the time. Anytime you see the three threes, those means it was war news. So yeah, we got stopped out. So that's why you still follow your stop losses because even a 90% win rate can be stopped out by war news. Let's see. So let's look at this Nirvana setup here. So we entered here. Our stop was at the bottom here, right? This candle opened up as a one bar, but we waited for it to form. It turned into a two bar, it transformed into a two up bar once it broke the previous candle's high. We got in. You could have banked sold here, or you could have waited a couple days about a healthy expiration date, banker sold here, or you could have held for the entire month. However, you want to take profit on a daily time frame. You want to take profit pretty maybe after like 4 or 5 days. And after you see profit here. So this was about, let's see, futures 45, 54.55 to 55.59. Let's say we got in right. or exited here. So that was about 90%. So that's beautiful there. So just wanted to show that this is on any, not sure when to enter. All right, I'm actually going to show a live example to make it more clear. Let's see, got you here. So let's take a look at this example. I'm going to use the replay again. I'm going to use the replay again. So let's see. That is not a replay. Where's it at? Let's play this here. All right, so look at this bar and this bar. This is a Nirvana setup forming. We call this a Nirvana setup forming. This closed on a day as a three bar, right? Closed on a day as a three bar, right? Since it closed the day as a three bar and the previous candle was a consolidation candle and this was a price expansion candle, now we're looking for direction. So now I'm going to slow this down. Let's see by point 0.3 and hopefully it doesn't form. So next day when futures market opened, let's take a look here. Please don't do a two up first. Show it forming. I don't want to confuse nobody. Now it's not going to do it on this replay editor. Um, your entry was here. Your stop was here. Excuse me. Your entry was here, right? Slow down real quick. So your entry was here. Full entry was here. And your bear entry was here. Actually formed a line. That makes sense. Right. All right. So your stop was here, your entry was here. Now, what you need to recognize, the reason why it's confusing you, because when the market opened, it opened here and it was a one bar. So it opened as a one bar. So this was a 131. Now we're just waiting for direction. So this didn't turn into a two bar until it broke the previous day's high. When it turned into a two bar, we entered here where our notification was, and then it broke out here. So where our entry was here, this was a one bar at first, and then it broke out. Let me see. I'm going to show everybody one more example because I want them to see it actually forming. So let's take a look at the 15 minute, right? Let's take a look at the 15 minute. So on this 15 minute here, hopefully this will have more clarity. Let's go and press play. Cool. Cool. Now we have a Nirvana setup forming, right? We have a Nirvana setup forming. So our entry to the upside is here, right? Entry to the upside is here. Our entry to the downside is here. Okay. Entry to the downside is here. So we're going to press play here. Hopefully it shows it as a one. All right. That was an excellent example. Oh my God. So you got to realize the next candle, it opened up here, right? So it opened up here. It looked extremely bearish. So this was a one bar, and once again, it didn't show it forming because the replay editor sucks. And then it went all the way down here, and then it broke out here, right? So now we're on the side of the bulls. So although it looked bearish, people that bought puts got trapped because they didn't wait for the directional candle to form as a two up bar. So this is now considered a bullish Nirvana setup completed. So, and we're in here. Now that we're in here, the bottom of this three bar becomes our stop loss because that means that if it comes back down here, that means the bears have completely taken control. If we take a look here, anything within here is considered our chop zone. Anything above here means that the bulls have won. So as we take a look, as you can see, it broke out and as people profited. But okay, yeah, yeah. So it broke out here. Since it was the 15-minute time frame, what do you do as a scalper on a 15-minute time frame or intraday trader? No, this is scalping. You take profit quick because after everybody sees the breakout, they're going to sell. So that's more intermediate advanced knowledge, right? So you need to sell at resistance. You need to sell at a reasonable price or at a reasonable breakout level. You need to sell after ATR has been hit on that particular time frame. So that's just, I just wanted to show y'all an example. Let's take a look just in case, see what happens. Sometimes it still breaks out longer. So as you can see, the breakout did not finish anyway, but people sold their profit and then it kept going. After they sold their profit, it kept going back up. And then that's probably 30 minutes of breakout. So we should see a pullback. So we should start seeing a pullback. Yeah. So once you start seeing price that's another three bar. That means there's a reversal coming, so you should be out. You know the three bar, big money or large amount of money is entering that. This is not big money, but this is a large amount of money entering the market. So that means there's potential for reversal is coming, so you leave. So I hope that answered your question a little bit. It's going to take a little bit of visual clarity to understand this because this is a lot of information I'm tossing at you guys. Wait, so Shark has his own Discord separate from the Golden Algo. How do I join? I'll show you a link. My primary Discord is Wolf's Discord, the Golden Pocket. However, I have a trading community for educational purposes. And I'm teaching traders essentially how to get on my level. So I'll post that here at the end of this. Let's see. Makes sense. Good. If we miss the first entry, does that mean we missed the trade, or can we get a second entry? If you miss the entry, and that's why I emphasize on getting in as soon as the two up or two down happens, because it's a breakout. And once that pressure, that war is won, is going to break out. It's going to happen quick. So I've seen even on a monthly time frame, as I showed with Google, I've seen it happen within the next trading day. It ran up. And it's happened multiple times. So you don't want to miss out on that. So even on a monthly time frame, when we traded the Nirvana setup, this happened. This was March 1st and it closed. Let's see. On April 1st, Google ran up all the way to 160. So you don't want to miss out on that. So you get in as quick as possible. You don't look back and you set your stop loss. Appreciate that invite. Yeah, definitely. Um, yeah, post that. So that's the Nirvana setup, y'all. That's my most number one most profitable setup within the market, within the strat. And that's Wolf's Discord. Yeah, Wolf's Discord. I'd highly recommend Wolf's Discord. They have a killer team in there. A team of people I trade with. I've learned so much from the people I trade with, and we're a team, and we make money on a weekly basis. My team as well. We have investors, traders. We have crypto guys. We're making money in all different essences, and we love the larger time frame, man. We sit in some place for 5 weeks and we just sit there and just keep banking money. And it's amazing for small accounts as well. Let's see. So let's take a look at the next one. This is the Holy Grail setup. So the Holy Grail setup is the 3-1-2 setup. So ignore these examples down here. These are actually Nirvana setups, so ignore that. The Holy Grail setup is a 3-1-2. So it is a 3-1-2 bar setup. There we go. I was like, where is it at? 3-1-2. Nirvana is a 1-3-2. Holy Grail is a 3-1-2. Powerful setup. Second most powerful setup in the market. If there's money to be made, if there's no Nirvana setups in the market, I'm trading a Holy Grail. And the Holy Grail has an edge to it too. Appreciate it. I appreciate it. I'm glad everybody's getting informed and confident. I want people to see what I see so we can trade and make money together. We could trade and make, because there's times where I'm in a play and I don't care about the market because I know where my money is going to go and I know when I'm going to make the money. So I don't care. So if I have more people on the level of me, then there's more money to be made because there's a lot of times I can't even be on the internet for certain reasons. So 3-1-2, power and direction. So the 3-1-2 setup is considered the second most powerful trading setup in the market. This setup combining the volatility of an outside bar, the consolidation of an inside bar, and the breakout momentum of a directional bar creates high probability opportunities for traders and investors. It's also your second most profitable trading setup, reflecting its reliability in capturing key market moves. It supports all trading styles. Once again, if you're a trader, investor, crypto, scalper, swing trader, elite buyer, any of that, it's amazing. Um, and confirming the direction of the price as well. So any time frame based off your trading style will fit you for this setup. So taking a look at the Holy Grail setup, I love the Holy Grail setup. I think that's Wolf's favorite setup as well, the Holy Grail setup. So we traded the Holy Grail setup on Meta. Holy cow. Yeah, we traded the Holy Grail setup on Meta last month. We made a lot of money. Wolf called out some Meta calls as well. Made a lot of money. Why do we make a lot of money? Everybody else is looking at the 15-minute. We're looking at the monthly. We're looking at the weekly. We're looking at the 2 day. And we see, oh my dear Lord Jesus, I didn't see that. Oh wait, no, wait. This is not live. Let's take it back. Let's take it back. I was like, hold on. That wasn't okay, here we go. We traded the Holy Grail setup. Me and my team actually traded the Holy Grail setup back in May. banked off of it, banked off of this setup. It was amazing, amazing money to be made. This is 30 days of consistent profit day by day. Uh, Slight pullback. They didn't trick us too much. Whatever we added at the bottom, anyways. So, let's take a look here to show you what it looks like when the Holy Grail setup forms. Let's see here. Bar replay. All right. So we have a 3 bar on Meta on the monthly. Big money is entering the market early. Big money, a lot of volume, a lot of price action. Boom. So as a strategy, you're like, okay, I need to keep my eyes on Meta within the next 3 months. See what happens. Price expansion, outside bar, right? So taking a look here, we're going to speed that up. Okay, so now we're consolidating. So now has a potential to make a 3-2 to the downside, a 3-2 to the upside, or close as a 3-1. If this closes as a 3-1, this is why we call it combinations, strat combinations. That means that there was volume that entered the market and then price compression. What it happens after that? Direction. We want to be on the right side on the 1 month time frame. So let's go ahead and let that form. Boom, 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 boom. Cool. People are playing in. I'm not trading inside bar. You can do your thing. You can go on a smaller time frame, making money. There's still a lot of money to be made. Cool. You can do your thing. I have a systematic approach, whatever. Everybody's like, hey, meta this, meta that. I don't care. News, intermarket economic, earning news. I don't care. CNBC, Google Glasses. All right. So let's take a look. Okay. Price closed as a 3-1 on the monthly. And now a 3-1-1 is formed. This is a holy grail setup. This is a holy grail setup. This is a wonder if I could just put that on here. Is that gonna work? Nah, it would be too good to be true. This is a holy grail setup. I actually had this on the I delete my holy grail. I had a picture. Whatever. I don't want to confuse anybody. This is a holy grail setup. So let's take a look here. What does this look like? So how do we trade this? That's our next question. So once again, entry is here, right? Because this last month closed as an inside bar, right? So if we get a directional candle, we want to be on that side. Volume entered the market here, price compressed here. If direction breaks, we want to be on the right side. So calls here, right? Healthy contract. This is a month. I think somebody asked me, why don't I get 3 months out? On this particular contract, we got 3 months out. You want to get 3 months out. We want Theta to not bake our contract. We want Theta to not get us cooked. So you get 3 months out because why is that? There is a large probability they're going to chop this for about 3 to 4 weeks, and we don't want to lose all our money. So you get 3 months out. If you have a small account, you can go way out the money. Meta still pays. Uh, so yeah, as we go here, this is a bear entry, whatever, right? So keep going. Boom, boom, boom. Boom. It broke to a 2 up. We entered here. We are already in profit. Meta is already from 482 to 495. So we're already up about 60%. All right. Is it done yet? Did its thing. It broke out. It is not done yet. It is not done yet. The power is impeccable. So Meta now closed on the month at 508.84. So we made thousands of dollars off this play. Thousands of dollars. This is a great play. So yeah, Holy Grail setup. I love the larger time frames. You could do it on a daily as well. Let's look at Spy. Spy loves Holy Grail. There's a Holy Grail on Spy right now, right? Or am I tripping? I feel like I'm tripping. Yeah, I was tripping. There was a Nirvana the other day. Y'all made money off of that. Wait, no, that's not true. Let's take this replay off. Um, that is not true. So let's take a look at the Holy Grail setup on Spy. So let's see, 312 as our search engine by Bleezy, 312 up. So we're taking a look at Holy Grail on Spy. So Holy Grail on Spy. We're taking a look here. So we could see when SPY completed its Holy Grail entry here, right? I'm not going to replay this one. We entered here and we made money for multiple days. Then it bounced off resistance, then dumped, right? So you made money for multiple days. You were already in money the next day. Why is that? Because SPY has a high market cap. It's a high profitable ticker when it comes to the amount of volume that enters it. A lot of volume entered it here. Didn't care that this looked like a bearish candle. This is a bullish hammer on the inside day that closed. We broke and we got in SPY off the inside day. What did it do? Once again, for y'all, you all that attended my last class, it went back and tricked everybody right at the 50% of the previous candle to chase a stop loss. Did we care? No. We were down probably 300 before we were up 700. We don't care. You have to be disciplined and have to know how to trade the larger time frame and be down before you're up when you're swing trading. Um, oh my God, there's one on Holy Grail. Yeah. So taking a look here, yeah, we made money for multiple days. When these setups happen on SPY and things like that, it's rare. So that's why I get so excited. So I only trade these setups. I scan the market for these setups, and we make money on tickers that have volume in it. So, taking a look here now, what's interesting about this is what I want to show you. This is why I love Holy Grails, right? Because when you get stopped out on a Holy Grail, you still win. Let me show you why. Let me show you why. Let me show you why. Holy Grail is the second most profitable setup in the market. Second. This is why. This is why here. Let's take a look. Let's take a look at SPY here. This was during the war news fake out. So war news happens, everybody's like recession, whatever, recession this, recession that. Um, okay, so we have a Holy Grail set up. We have a Holy Grail set up. Bull entry here, right? Bull entry here. This is why I love the Holy. This is the most important. What I'm about to say is the most important information you need to know about Holy Grails. Um, Bear entry is here, right? Take a look at SPY. Let's see what happens. Let's do that again. Let's run that back again. Let's run it back again. So we're gonna do point 0.3, see if it shows us the updates. So boom, boom, boom. They're not gonna show us the updates. What if I do point 0.1? All right, press and play here. Holy girl, da 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 da. Anytime now. All right, they're not gonna show us. So this is what I'm showing you. A three bar is formed when when is it formed? It's formed when the price exceeds the high of the previous candle and the low of the previous candle. So what SPY did to our Holy Grail setup is it opened here. And what did it do? Where did it open at? So it opened at 534.07. 534.07. So it opened here and then it came all the way down here. You would have gotten to puts. Our stop loss would have been here, right? Stop loss would have been here. And then it came all the way back and stopped us out. It stopped us out. But guess why I love getting stopped? I love getting stopped out of Holy Grails. I love getting stopped out of Holy Grails. The reason why is because you make money anyway. You know why you make money anyway? Because now we have a Nirvana setup. So anytime I get stopped out of a Holy Grail setup, it is now a 1-3 on that same time frame. So I take my loss. I look at the market and the market maker and I say, I'm still going to make money because you took my number two setup and cooked it and turned it into my number one setup. This is like the most important video point of a Holy Grail. A Holy Grail will form if it gets stopped out into a Nirvana setup. So if it does nothing, there's no such thing as a stock doing nothing after it compresses. It's eventually going to break out. So you said, why would you set a stop loss on a Holy Grail? Because if you would have gotten puts, this 3-1-2, this was a 3-1-2 to the downside, right? I just can't replay it because trading view sucks. And it came down here and it stopped us out. It turned into a 1-3. Now it's a 1-3. But you set your stop loss because if you don't, you're going to lose all your money. But if you exit, right? Exit your contract. And now you say, okay, well, I have a Holy Grail set up. Now I just wait for the two up bar tomorrow. And for me, I don't recommend this for new traders, new investors. For me, I double down because I'm like, okay, you turned my number two setup into okay, so you turned my number two most profitable setup into my number one most profitable setup. So now I wait for direction and I make all my money back plus more. Let me speed that up. So I make all my money at back plus more because you stopped me out here. It's okay. I'm in calls now. I'm in calls now because now Nirvana setups are going to pay way more than the stop loss that I just took. So it doesn't even matter. So this is the system that I approach. I don't care about the market. I have conquered the market maker. I have conquered them. It doesn't matter that people chase my stop losses on setups like that. Um, so taking a look here, that's the Holy Grail setup. How do you set a stop loss on Robinhood on an option contract based on the stock price? You actually have to calculate a stop loss. Unfortunately, there's no feature to do so, so you have to. I use man. I'm not gonna lie. I don't trust Robinhood's order fields. I've been kind of like just shitted on based off my order, my stop order, not feeling. So I just do mental stops and I should say manual stops. So I set my notification. I get out with my own thumb when my stop loss is hit. Do I use any other indicators? Oh yes. So I use a series of indicators made by my engineer, Bleezy, which I'll link his Discord in the chat at the end of this lesson. Amazing engineer. He changed the game for me. I still work a corporate job right at this moment. I don't have to look at much. He has a search bar for setups. He has a indicators that scan any ticker in the market across here and show you the setups on any time frame. He's amazing. I highly recommend inquiring on his indicators as a package. He sells them as a package, and it will change your trading game. As you can see, the search bar shows you when it comes to back testing the amount of patterns found on that time frame and the last occurrence of it. Yeah, Robinhood likes to rob people. So taking a look, that's the Holy Grail setup. The last one I want to go over is the breadstick setup. So in our community, we had the name breadstick set up as multiple inside bars closing. Super profitable, extremely profitable. So let's see. Taking a look here. Give me a second. I got a message. I need to reply to. So taking a look at breadsticks here. Breadsticks power direction. So the let's go into full screen this here. Here we are. All right, so breadstick setup. Once again, power direction. The one bar setup is considered a powerful trading setup in the market. This setup includes the consolidation of multiple inside bars and the breakout momentum of a directional bar. So when you look at a chart, you're a technical analyst. Your chart's y-axis is price, and your chart's x-axis is time. So you're looking at rate of change over time. If you go back to elementary geometry, or is that geometry? Yeah, I almost said geography. Geometry questions. So rate over change over time. When you have price consolidating for a long period of time on a large time frame, it's going to be followed up by a breakout. And I'm going to bring up Tesla as an example. We've made so much money on Tesla. Yes, sir. Apple has a breadstick on it. Yes, sir. Apple going down. Yes, sir. Y'all already know. I'm glad y'all in tune, man. Y'all in tune in this market. We're seeing it. We have the same language. We have a gap overlay. Do you enter at mark open? Nope, I don't. So that's another thing, Chris. People, this market kind of knows our strategy this year, and now they're making price move in pre-market. If it's too extended over our entry, I just look away because I know there's other opportunities to be made in the market unless it pulls back. So, unless it pulls back to entry. So going back to this, once again, it formulates all trading styles. Frame accessibility. The larger the time frame of the breadstick combo, the longer and bigger the breakout. Let's go take a look. So let's go take a look. So we ate off of Tesla. We ate off of Tesla. Why did we eat off Tesla? Why is Tesla doing all this news before it dumped the other day, right? Why did it dump actually? Let's take it. I'm going to answer all those questions. So let's look at the what is it? What was it, the 8 day on Tesla? Nope, it wasn't the 8 day. Was it the 6 day? We're going to take a look. Oh my God, look at that holy grail. Whew. All right. Actually, no, this is not live time. I keep forgetting to take off replay. Let's take off replay so it can make more sense to me. All right, let's take a look at the 8 day. Oh my God, the 8 day was beautiful. Look at this. We ate off of this. We ate off of this. Both servers, the Golden Pocket server and Constructive Common Sense, ate off of Tesla. Oh man, I love these setups. They come so rare. So, what happened with Tesla? Let's go ahead and do the replay function again so I can show you in live time. So, with Tesla, for 16 days, we had chop. If did my computer crash? Oh, TradingView is doing this $30 a month. Okay, so let's look at Tesla. Boom. We had 8 days of chop. Tesla. Not Stratters do not trade this, right? But we see a one bar close on the 8 day time frame. We get excited. We mark the previous candle's high. We mark the previous candle's low, right? Is it going to break that? Oh, well, it's not done for me. So it closed the inside bar. Okay, that was the two bar. I'm getting ahead of myself. So yeah, it's bearish, whatever. Directional candle to the downside. So we're gonna let this play out. 8 days of chop, whatever's running up, running up, running up. Oh, it goes bullish. Oh, it's pulled back, fake them out. Okay, so close as an inside bar on Tesla. Whatever, looking bullish, still not gonna assume, right? Because we don't have a directional bar. But now, hey, look, next 8 day candle is forming. Last day closes the inside bar. What's going to happen? This is now a 2-1-2 setup. It's not even a breadsticks yet. I'll tell you when there's a breadsticks forming. All right, breadsticks is now forming. I'm freaking out. I'm blowing up everybody's Discord. I'm blowing up my whales, saying, hey, Tesla's going to do this at this price. Enter here, exit here, right? So my entry is here, 224.80. We called this out on both Discords. My stop loss is 202.59. If it goes to the downside, I'm switching to a bear immediately. If it goes to the upside, remaining a bull. Let's see what happens. So it's doing this, boom, boom, boom. Okay, boom. We got in once price insert. Was once price broke a two up at 224.8, we are in calls, we are in longs, we're buying healthy expiration dates. Wolf has the wisdom and showed us traders to multiply the time frame times three and buy that many days out. Not days, but trading days. We're trading, the market is open Monday through Friday. So in this case, if I could do math, 24 days out, 24 trading days, not 24 calendar days. So you buy that expiration, we're in calls, we're sitting in there. If you're a small account, you're buying out the money, right? Now we have a bull target of 257. Let's see if we can hit that bull target. Oh, crap. I'm down $1,600. It's crap, but my stop loss hasn't hit yet. But what do we have to do before a breakout happens? We have to chase that stop loss, scare all the retail traders out. What are the big money doing? They're adding at the bottom at the 50% of the previous bar. It's always the 50% that they chase it to. Boom, we bounce. Oh my God, it's crazy. Okay, we're back at entry, whatever. I probably added again. Okay, now that 8 day happened, that was good, but I know there's more money to be made off this breakout because I know the psychology of a breadsticks combo. We had 16 days of people entering the market buying calls and puts, and we now know that the buyers won because of this two up bar. So we now know that the breakout is not done. So we do not sell early. I don't sell early. If you're a small account, take money, take profit quick. So do whatever, consolidate, chop, whatever, boom, breakout happens. But I know that there was 16 days of chop, so I know it's not done yet, right? Let's see, it's not actual 20. So yes, for expiration dates, you do not look at the calendar for 20. You count trading days, 24 trading days, not 24 calendar days. So you do not count Saturday and Sunday. You count out 24 trading days. So yeah, hit play on this here. Look at bull target, boom, bounce right off of our bull target. Now we start taking profit. If it keeps going, whatever, pulls back, whatever, we're not looking back. But Tesla did its thing, kept going. And it kind of consolidated. Yeah, it stayed around our bull target, consolidated, then it dumped. So we're already out. We already took profit. So it was an excellent play. That is a representation of the power of a breadsticks combo on a large time frame. I'm using the 8 day time frame. Um, I use all over 40 time frames. Do I look for any other confluence before entering? I look for what do I look for? All I look for, my friend, is confluences on other time frames. So let's take a look here. So in this case, we had a breadsticks setup. Let's do it here. We had a breadstick setup forming on the 8 day. We're going to look at the 7 day. We had a 2-1-2 on the 7 day. That's another bullish confirmation. On the 6 day, we had a 2-2 reversal. Now this is going farther than another lesson. Let's see here. We had a bullish holy grail on the 5 day. That's also confirmation that it's ready. On the 4 day, we had a this is why it's called the multi-time frame. Um, strategy. 2-1-2 on the 2 days let me know bulls are in control and it's reversing to the upside. Well, as you can see, there's some mix and match here. It's like, hey, why is there a bearish 2-1-2 and then there was a bullish? Anytime you see something like that, That means there's something going on a larger time frame. So that's why we use multiple time frames. Well, we switch to the 8 day, we see 16 days of chop, and this gives us a clear answer. And you go to the weekly, you see a bunch of chop. So that's not the answer. You don't know. So use multiple time frames. Oh my God, the 2 week, the Bulls have already showed that they won. So now we get our answer. Hey, is this a 2-1 or is this an A plus setup? Yes, it's an A plus setup. Why is it A plus setup? Because the 2 week is showing us confirmation to the upside. The 8 week is showing us confirmation to the upside, and the 5 day bullish holy grail is showing us confirmation to the upside. So that's three confluences that makes it an A plus setup. So that's how I do my full analysis on things. Okay. So and I like to do it when a market is closed. You see things before it happens. We already know people got chopped out here. Let's go back to the 8 day. We know people got chopped out here, people got chopped out here. Now they're ready to run it up. So that's how you look at it there as an analyst. So taking a look at so that's the power of the breadsticks strategy, pattern, I should say. So there's times where there'll be more than two ones. Once again, we showed the combination of the breadsticks of the AMC. AMC is it broke to the downside. Now it's going to continue to go down. This is live. So let me show you our other one. We made 6 grand on IWM. We made 6 grand on IWM. Why do we make 6 grand on IWM? Because they had 2 months of consolidation on a ETF, on a trust fund. That is rare. This happens once every 5 years. Were we going to miss that? No. Take a look at the replay one more time. So we're going to replay here. This is what we call back testing, by the way. So this is the replay here. We have IWM. It closes a double inside on the monthly. I call it breadsticks, for a nickname of it is breadsticks. Double inside on the monthly time frame is amazing. It's amazing. Price is consolidating for 60 trading days. So or not trading days, but calendar days. So let's take a look. It's doing its thing. Boom. Opens up bearish. We don't care. We see three inside bars. We're waiting for a directional candle. So now our entry to the downside is here. Entry to the upside is here. The previous candle's high, right? So now we enter our bull entry here. And we enter our bear entry here. So put that here. So right. So our bear entry is here. This is the chop zone. What do? We stay out of the chop zone. I don't care if news drops. I don't care about any of that. All that stuff has been known to not show me certainty in the past. This has been proven to be profitable. Show me certainty. This is the chop zone. I'm staying out of this chop zone. So there's chop zone here. That's where, you can let your scalpers and intraday traders do their thing. I don't care. I want the big breakout. I am hungry for the big breakout. So you let this play. Now we have our zones here, our entry, our exit, our level to the downside, our level to the upside. Let this consolidate. Oh my God, it broke out. Why? So is the breakout done yet? No. Why is it not done? This is a high market cap stock that is an ETF of a which is a representation of hundreds of stocks, and it's the Russell, and it's consolidated for 60 days, and it's broke out, and the two up bar conformed our direction to the upside. So now we get in, and now as you can see, the breakout happened, and oh my God, we flipped so many accounts with this play, with one play, pressing two buttons, two buttons for a couple weeks. All we did was press two buttons. We made it simple. It hit our bull target and it hit our bull target, went near our bull target zone, and it fell off a cliff. We took profit already as soon as we saw reversal potential on other time frames, right? It's a bearish hammer on the other time frames, or bearish candle there. So we took profit and we were gone. So and then after that, fell off a cliff. Guess what? After it fell off a cliff, it made a Nirvana setup. More money to be made. You see what it's saying? This is a systematic approach. It's a systematic approach. So if we're looking at the same language, we know what to do. Boom, bearish Nirvana to the downside. You could have played puts back to the downside to your entry. Your entry was now to the downside was now support, bounced off support. So that's just like the connotations I want you all to get used to. Um, yeah, so that monthly breadsticks combo was amazing. Amazing. My name for those anytime you see me change my name to a certain ticker, this is what I'm looking at. I'm looking at larger time frames. Um, so that's a great question, Chris. Let's take a look at stops. So we already talked about stops. So I'm not going to go over this for too long, but yeah, stops for the bullish Nirvana are set up based off of are placed at the bottom of the three bar for longs and the top of the three bar for shorts. Same thing with breadsticks combo. I don't know what happened to my There we go. Yeah, Holy Grail likes to come in later because it knows it sucks. But stops for the bullish Holy Grail are placed at the bottom of the one bar for longs and the top of the one bar for shorts. So read over this. I'll provide this. Go over it. You'll know how to set stops. You need to risk based off of how wide the previous bar is. You need to risk less. You're still going to make money. You're still going to make money. Do not blow your accounts up because everybody in here is a sentient human being with lives. And when you see your account, when you're trying to chase a Lambo play because you see an amazing setup and you see your account down 80%, if you in those 4 weeks, over what is that? Over 4 weeks is like over 200 hours where you can sell early, you're going to get cooked. So do not size in your psychology. You may wake up and have a bad day. You might drop your biscuit on the floor and just be in a bad mood. You're going to become emotional. So don't over leverage. I over leverage at times. Yes, I've won, whatnot, but you need to wait till you have the confidence to do so. So, but I still don't recommend ever over leveraging or even doubling down because you know your strategy is going to work. So focus on how much money you can make within the next 100 trades rather than the next five or two or one. All right. So taking a look so back testing. Oh my God. So back testing, anytime that I am in a play on a larger time frame, instead of looking at other people's food or looking at other plays, I am seeing how well before, during, and after that setup works on that particular ticker. So back testing the strat setups like 312 and broadening formations helps confirm their effectiveness across different stocks and time frame. This builds confidence. That's the key word, confidence. You want to have confidence in your trading plan. You're going to have times where there's economic events, there's earnings, there's seasonality, there's war bullshit, there's a bunch of stuff. So you need to know with back testing, with that ticker, history repeats itself. So the strat is based on repeating price patterns driven by human behavior. These candles, you're not looking at something that's lifeless. You're looking at human beings buying and selling for a particular reason. So you need to get in when big money gets in. That's a three bar. So the one bar, two bar, and three bar reflect common market actions, consolidation, breakouts, and reversals. The broadening formation shows how markets push to extremes before reversing, a cycle that repeats consistently. By back testing, you prove these setups work. And because history often repeats in markets, the strat helps you predict future moves. So give me 2 minutes. I'm going to take an intermission for 2 minutes just to use the bathroom, and I'm going to come back and show you how to back test. As a trader or an investor, this is one of the most important skills you need to be able to be a stratter or whatever strategy you use is back testing. So give me one moment. Alrighty, I'm back. So taking a look at back testing, exciting. So a lot of people, whenever you feel the urge to have to look at news, look at external sources, look at other people's trading plans, you feel like somebody's going against your play. You feel like the world is going against your play. You feel like you're being faked out. You don't know if you're being faked out. You're worried about your money. That's going to happen as a trader. So instead of having feel like you're getting into the mindset of guessing, you give yourself confidence and you fuel yourself with confidence. How do you do so? You back test. Now, luckily, with my team and my engineer, Bleezy, he has created one of the greatest indicators for any stratter, and that is a search bar, a literal search bar per ticker, per time frame that allows you to be able to see when a pattern has happened in the past for that particular ticker. Been using it the last 4 months since, well, since April, and it saved so much time and gave me so much confidence in my plays. Because there's even times where I've been had a bad mental state or had a bad morning, and I didn't know if I wanted to stay in a play or not. So this is super important, super important. So if you take a look, let's go take a look at Meta. Let's see. Yeah, let's take a look at Meta. So if we're on the monthly time frame of Meta and we're trading the monthly Nirvana setup here, this 132. You're in here, you're getting faked out, it's pulling back. You're sitting there like, okay, I wonder if what's the history of this stock, right? So you can manually go and look on the monthly time frame for previous nirvanas to see how well they work. You need to backtest. You need to see it for yourself. You just can't listen to a random guy you just met on the internet, right? So you need to go see the proof yourself. So you can see this previous nirvana worked out to the upside for at least 6 months, 5 months there. So as you can see, this bearish holy grail worked out to the downside for at least 5 months there, right? And you would have entered here. So if we're looking for a Nirvana setup, let's go look for a bullish Nirvana. So let's say the first candle is a 1 bar, the second one is a 3 bar, the third one is a 2 up bar. Hit OK, we highlight them so we see exactly where they are in history. Well, as you can see, the probability of success rate of it is extremely high. You always make money. You're always in the money with these. So let's see. It says, and it shows here on this indicator that there's been in history since Meta has started 4 Nirvana setups, all the way since the beginning of time of this ticker. So last occurrence was November 1st, which we already looked at. Let's look at this one here. So this one, as you can see, they pulled it back, whatever, but it's still profited. It's still profit. Our stop loss was down here. If you have enough time, you're going to profit way more than the theta that was burned. That's what you need to understand as a systematic approach. You need to buy the correct expiration date, or this entire strategy will not work. So as you can see, it still went up. It was kind of choppy because this was 2016, so there was less liquidity in this ticker, but it still profited. So with that being said, you see this happens, and this is the fourth one. You know that there is a even more higher success rate of it working out for you. Let's go take a look at a random ticker. Let's take a look at Google. So you take a look at Google, and you see these Nirvana setups. This one that banked on April. Then you go and take a look at this one here. Oh, well, crap. This one got stopped out. This one barely ran up and got stopped out. So now there's a chance that, hey, maybe this ticker may fake me out. Let's see, there's 4 of them total. So let's see. This one played out very well for multiple months. This one played out very well for multiple months. So that's 4 patterns. Out of 4 patterns, one of them got stopped out. So that is a 75%. There's a 25% chance that you'll get stopped out. And if you get stopped out, you get out. Now, what's cool about the strat is even here, right here on August, what is this? August 1st, 2022. If you go to another time frame in August 2020, what was that 2022? You may see, okay, well, and I've already researched this, by the way. This was war news. This was another war news. War news will cook anything in the market. War news happens once to twice a year and just cooks everybody. But taking a look here, this happened on the smaller time frame as well. So yeah, this happened on a smaller time frame as well. But you may even go to like the daily on that same thing in 2022. But what I'm trying to show you is back testing things will give you confidence in your play to show you, hey, this setup is not a bluff. So let's take a look at Holy Grail. So let's see. We're gonna go to like I love Tesla. Um I love Tesla 3 bar setups. They're amazing. So let's take a look. Um let's say 2 down 3. Let's look at a 3-2 setup on Tesla. 3-2 setups on Tesla on the daily time frame. I love Tesla 3 bar setups. As you can see, Tesla on the daily, if you would have got in off this 3 bar here, got in calls and ate, you would have ate for that day. I love Tesla 3 bar setups. I only play Tesla when there's a 3 bar. So let's take a look here. And this is the importance of back testing. There was a 3 bar that closed on the day. You would have entered at the previous day high, got in, you would have banked, right? So here's a holy grail setup. 3-1-2 to the upside. You would have got in at the previous day high. Once this day opened here, you would have banked across multiple days. Once this 3 bar hit, that was a potential for a reversal. So taking a look here. This three bar did a fake out. So now, okay, bet out of four setups, we have one that did not work. Um, but these things, what you got to realize, anytime you do a swing play with these setups, this is why I use this strategy requires multiple time frames because the bigger time frame always beats the smaller time frame. So at least you don't need all 40 of these. You need at least the daily, the weekly, and the monthly. You need at least those, the daily, weekly, and the monthly. The daily, weekly, and the monthly. You need at least those so you can see the bigger picture. The bigger the time frame, the higher the success rate. So let's take a look at Tesla this week. Let's take this replay crap off. So why did Tesla fall before all the news? I don't care about a taxi or nothing like that. What happened last week? The week before last, actually, it closes a three bar. So a lot of money entered the market. But earlier in the week, we had a 3-2 to the downside. So you had your answer on where price was going to go before the news. You should have been in puts. And then same with the daily. Look at the daily. There was a 3-2 to the downside on the daily. So you would have already know where news was going to take you before and you should not be in calls. It broke the previous day low. And this is the daily on Tesla. So if you're in calls, you're going against the strat, you're going against your systematic approach. You're going against your own rules. Also, 2-1-2 on the 2 day, bearish. 2-1-2 on the 3 day, bearish. 3-2 on the 3 day, bearish. Why are we bearish? Honestly, because Tesla's still going to run back up, but why are we bearish? We're bearish because all the buyers that got in here and played off that 8 day, they're selling their profit. So it's going to fall off a cliff regardless of what news is bullish or not. So, with that being said, Tesla is lagging behind because it's going to bounce off. We're just looking for a three bar to the upside or an inside bar, either or. We look for a one or a three bar, and then we look for direction. That's called the momentum breakout pattern. So, yes, that's Tesla analysis. I don't want to get too far into that, but you need to back test to have confidence. Bleezy has a package of indicators that make the strap so simplified. You'll get the search engine, you'll get the strat patterns that's found for you across the entire market, including crypto. It'll have and list all the tickers on that time frame that is forming a Nirvana, a Holy Grail, a 2-1-2 breadsticks, and a three bar. Amazing. Makes trading so simple. I'd highly recommend acquiring on that. I use it and it changed my life. Now I don't have to go hours every day looking for these patterns per ticker, per time frame. So yes, we have that available for you if you're interested. So taking a look here. So to simplify this here, I'm not going to spend too much emphasis on these actionable signals, but you just need to know with this strategy, whatever you already know, the strat just enhances it. Momo hammer. Momo hammer forms as a bullish continuation or bullish confluence. So you don't just look at the numbers, you look at what the candlestick pattern is also forming by itself based off of your already existing analysis in the market. You need to know your dojis, you should know your hammers, you should know your haramis, you should know your bullish and bearish engulfing, three white soldiers, three black crows, things of that nature, machine gun setups. The more you know, the easier it is, the more certainty you have, the more closure you have to make profit. This comes with as a skill set over time as an analyst. Is it worth it? Yes. Is it fun? I think it's fun because it's visual. Um, do you need to know the psychology of it? That's what breaks you from an average trader to an elite trader or analyst in itself as an investor itself as well. So learn your Momo hammers, learn your shooters, shooter as a reversal pattern. That'll go in confluence with your holy grails, with your inside bars. It'll empower your game in this market. Empower your game. So now tips and tricks. I would say, would you play supercomputer 8 hour 3-1 setups? Let's go take a look. Supercomputer, I know they had a something on a weekly recently that I missed out on. I didn't even see it. So they had a holy grail on the weekly. Oh my God. If you played that, you made money. So you would have got in here on the weekly setup. This is a reversal to the upside, bullish holy grail pattern, Russell to the upside at support. Amazing setup, amazing play. If you got that, congratulations. It's not done yet. Um, so now it's taking a look. Oh my God, 3-2 on the 8 day. On the 9 day, we have another 3-2. It is not done yet. 6 day, another bullish holy grail with the same entry. Amazing, amazing. Larger time frames are amazing. Now, if you're in my trading community, you know my secret time frames that I look at on a daily basis. Let's go take a look at the 8 hour. Yes, I would play this. Oh, yes, I would play this. But you always wait. You don't you just wait. Gather your entry. This close here. This is a holy grail setup. This is a 3-1, right? Why is this a 3-1? Because this has closed as a 3-1 and a nice doji. It looks like a bullish doji. So you set your entry here, you set your exit here, you'll wait for that directional candle to the upside and you'll bank. And you set your stop loss here, you size in accordingly. You size in accordingly. That's the most important thing. You know, you know where things are gonna go. If you don't know where things are gonna go back test it. Go back test the 3-1-2 to the upside on the 8 hour. So 3-1-2, 3-1-2 up bar. Boom, there's 98 patterns that had that same confluence. Well, guess what? The last one, look what it did. Oh my God. Look what it did. Yep. Let's go take a look at the other ones. The other Holy Grail to the upside. Look at that's beautiful. Look at this Holy Grail to the upside. Why is it so honest? It's honest because supercomputer has an extremely high market cap. Extremely high market cap. So you get more honesty in things that have volume already in it. And 3 bar tells you that there's being volume injected in it in the last 8 hours. This is telling you price is consolidating. We're just waiting for direction. I hope that makes sense. So tips and tricks. So I'm not going to go too far into the advanced tips and tricks, but what you need to know that's very important that somebody asked earlier. We use time frame continuity to ensure we're on the right side of the market. So now you have back testing and you have full time frame continuity. We call that FTFC, full time frame continuity. What full time frame continuity tells us is these arrows here. So let's go look at SPY. What we have on SPY as far as time frame continuity is the 4 hour SPY pull back, so it's bearish. On the daily, SPY is bullish. On the weekly, SPY is in, so let me put it like this. On a daily, SPY is in an uptrend. On a weekly, SPY is in an uptrend. On the monthly, SPY is in an uptrend, but we're in an inside month, right? That IN. On the quarterly, which is the 3 month, SPY is in an uptrend, but we're in an inside month. So that gives you a further confluence because somebody asked me what I use as a confluence that I need to look for entry to the upside rather than a reversal to the downside because it increases your reward and decreases your risk. So there will be times where I see a nirvana to the downside, but if I see full time frame continuity to the upside, I probably won't grab it. But nirvana is so strong that it still plays out anyway. So sometimes I still do grab it. But you need to use this as a secondary confluence to your plays. It is amazing. You can go as low as the 10 minute and you'll see that SPY majority is in the uptrend to the upside. You want to be on the right side of the market. So we use time frame continuity to ensure we're on the right side of the market. Now, this indicator here includes the numbers and full time frame continuity. So this indicator, this is the Strat Assistant by Ricky Carroll. Let me see if I can pull that up. Let's see, Strat Assistant, get that crap out of here. Where's the indicator button? This is the Strat Assistant by Ricky Carroll's. So I'm gonna screenshot that and put it in the chat for everybody to utilize. Definitely add that to your chart. It's the most common indicator used for Stratter. So amazing indicator, highly recommended. Highly recommend giving testimonials about it to the guy who created. So definitely look at back test full time frame continuity to the upside is currently being placed on SPY. Um, so you want to stay away from puts unless you have an elite strategy with an elite exit with other confluences and other indicators. So let's see here. We're taking a look. So tips and tricks. So the breakout 3 bar setups on the bigger time frame always wins over the smaller time frame. So keep that in mind. The larger time frame wins. And if you see multiple time frames with bullish patterns, that means the setup is A plus and there's a lot of money to be made. Broadening formations exists everywhere, and we can use this to determine the potential magnitude of future movements in price. 3 bars on larger time frame reveals big institutional money entering the market. That is so important for Mag 7 stocks, for big holders in healthcare and banks. This will always predict before news because news is used to move the market by retail traders. The way the game is played, institutional institutions enter the market and then they allow news to be released. So retail traders and retail investors and people that don't even look at charts will go and FOMO in to buy some stuff up, and then the institutions make the money. So if you know the logic of a 3 bar, the psychology of that on Mag 7 stocks, you can enter when you see a directional candle after a 3 bar and make money. That is huge. That is $1 million information. Inside bars are excellent for identifying consolidation dang, consolidating price movement and breakouts. So yeah, we have our breadsticks combo, our 2-1-2. We have 1-3. We have 3-1-2. We know that consolidation is followed by a breakout. So you want to be on the right side of the market when that happens. The strat is even better with additional market analysis. To maximize the effectiveness of the strat, traders should use the patterns in conjunction with other technical analysis tools and risk management techniques. Amazing. So take what you already know and apply it as so. Look at this here. Everybody in the Golden Pocket server uses the Golden Sniper indicator created by Wolf. He uses it as an exit. I haven't mentioned how to do exits yet on any of these strat combinations, which I'll do in a later provides in a later class, as I want to make sure I present it in the correct manner. So, um, but for now, we have Ghost Wolf's sniper indicator is going to tell you when something's overbought or oversold and it's ready to consolidate and go to the downside or the upside. So it looks like we haven't reached this red mark to this cross here. So IWM has more room to run to the upside. So if you see that in confluence with the pattern, let's go look at Apple with the pattern here. Look at that. Amazing. So Wolf gotten calls are down here, right? Let's see this here. Wolf gotten calls down here, broke out to the upside. Guess what? Double breadsticks combo on the daily. Previous day's low, you're gonna get in. When do you exit? When you gonna know when a breakout is done? Oh my God, I sleep on this indicator. I need to use it more. Holy cow. You're gonna know when it gets back to the oversold cyclic indicator of his golden sniper indicator that you can exit. So definitely inquire. This is amazing, amazing indicator that's well worth the money. You'll make the money back in literally a week. It's amazing. Um, so definitely exits. Other than that, use fundamentals. Use your patterns, your candlestick patterns. Use your whatever, your RSIs, your seasonality, your support resistance, double top, head and shoulders, cup and handles. Use your time frames that you're used to. Use your exits, basically your rules. You can use Heikin-Ashi candles for reversals. So many things in the market to be able to have a formulated, systematic approach of how you want to do things, and use the strat as a weapon to add to your own arsenal. So hopefully that's informative to you. That is a lot of information. I want to make sure that I hope I open the eye to the language that I speak in this market to a lot of you all. Remember, full time frame continuity is amazing. In my trading community, I post almost every day um, a scanner that shows what stocks have full time frame continuity to the upside or the downside with the highest volume. So there's a reason for that. We want to follow things in the uptrend, see where money is headed and get in early based off of our strategy. So the more correlation between multiple time frames, the lower the risk of your play. Traders should not trade against trend and utilize full time frame continuity to optimize returns. So keep that in mind, note that, study that, add that indicator on, know how that's going to go. If you plan on being a stratter, you need full time frame continuity, or you need time frame continuity to know what side of the market you should be on. So with that being said, I appreciate you all for attending this. We had an amazing, huge class. A lot of attendees here, a lot of faces I recognize, new faces. I see a couple of my algo traders there, my golden algo. I see constructive common sense is in here. I see Shark Illuminati in here. I see some family members. Wow, I see some whales in here. Give me some money. I'm playing. You're very much welcome. If you ever just throw it, hey, if I'm doing one-on-one sessions, this is for a limited time as I'm a bodybuilder and personal trainer, and I'm not taking any clients right now. So when I do, I actually take clients in the financial world of uh, setting up people with an elite trading plan based off of what you've learned. So if you do want to book a one-on-one session with me, I'll leave the link in the description of the chat here. This one-on-one session will include scanners. I'll set you up with push notifications for Nirvana setup, Holy Grail, through Thinkorswim. I'll give you an example on how to enter a trade with the live interaction and create a trading plan for the week and how to ignore the noise to be able to make money. So you'll get used to building that backbone. The sessions are paid by the hour, charged by the hour. I do have a free educational Discord business known as Constructive Common Sense. We make money in there, we learn in there, we grow together. We have all account sizes. We have large accounts. We have people trading with 50K, 10K, 2K, even $100. We have crypto holders. We have crypto scalpers. We have futures traders in there. So it's an amazing place to learn and grow and network, share ideas. Golden, I also trade with a team of elite analysts. Currently trading with Wolf, with Panda, if you recognize the name. I definitely, if y'all want to put that golden pocket link in the chat, amazing, 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 because they also have an elite, just like I showed you that exit indicator, they have so many indicators that make trading so simple for novice, intermediate, advanced traders. Uh, so yeah, we're if you're a stratter, if you're a sniper, scalper, whatever, tap in with us. Let us know. I appreciate your time. Um, Join the Discord, tap in with me. We're here. We have amazing people that want to teach you and get you involved in this. We need we have people that help you control emotions, things of that nature. I appreciate the love, appreciate you all attending, and I hope you all enjoy the a great rest of your weekend. And let me know if you have any questions. All right. Take care. Take care.